See, an understanding on, I want to give you an understanding on what are the sections, what is there for you to learn. And I wanted to give you that hard reality that not everything in detail we would be able to go through. So I want to touch upon whatever things which are very important for you quickly and then get you a recap of it. I told you earlier in the beginning when I was doing a discussion as well to you that we have like 3 sections for you to learn in your chapter. Like you have section 16, section 17, section 18 for you to learn. You look at for your May examination, okay, consequently for your September as well. You have section 16, section 17 and section 18 for you to learn, right? And in section 16, what are the things that you have for you to learn under ITC chapter? 16 has 16 subsection 2 which talks about 6 conditions for availing ITC, which is very important for you to look at. In together with that, you will learn something called as Rule 36, wherein they talk about how an invoice should look like. 37 talks about payment condition for availing ITC. 37A talks about tax payment to government. 16.3 talks about depreciation versus ITC, which is a small one-liner section. 16.4 is now considered to be very important. This is somewhere you will have a question in your exam. So I am marking this as 5-star. Don't go to the exam without learning this kind of an area, right? 16.4 talks about time limit for availing ITC. There's a clarification on 31.3F there. Then 16.5 and 16.6 talks about extended timeline for ITC and what if your ITC timeline if there is a revocation of cancellation. So since this is going to come in 16.6, you also have to correspondingly learn something called as section 29 and section 30 in registration chapter, considering this is touching upon registration chapter. Because there is an amendment, you should also be careful about these 2 chapters as well, these 2 sections as well. Then section 17 has apportionment of and block to credit. Apportionment of credit is something you can happily skip because it is tested extensively at final level. Block to credit is like a 5-star area. Every exam they ask you a question. Section 18 talks about cases of availing and reversing ITC. Section 18.6 talks about capital goods after purchasing the capital goods. If you use it for some time and you sell it, how the ITC treatment would be like. There is a rule 44, rule 40, 44 to be discussed together with it. Then you have cases where you can take ITC on stock and capital goods, cases we have to reverse ITC on stock and capital goods in 18.1 to that's where the discussion happens. You have some rules like 44, 41, 41A, etc. to learn that additionally. This is your structure of learning in your ITC chapter. So these 3 sections, if you look at, if you are having a fair idea on it, like see, after our regular classes, we tick on all of this and say that, okay, we have learned everything. So you can see all the ticks are there. If you're able to do a revision tick on all of this, then you can say that you're very confident on this chapter. Like in that first segment of discussion, ITC is a very important chapter to look at. Now let me take you through the topic. First, I will move to section 16, subsection 2. You can see it on the screen. I have given like 4 conditions for availing ITC, but I told you that in total there are 6 conditions for you to take ITC. Out of that 6 conditions, 4 conditions are to be understood here and 2 conditions that I have listed. Additionally, you can see here I have listed 2 amendments. 16.2AA was introduced, 16.2BA was introduced. So let's look at what are the first 4 conditions. So your understanding should be that you can take ITC on your inward supply only if you satisfy these conditions. What are the conditions that you have? Condition number 1 It says you should be in possession of a tax invoice. You should be in possession of a tax invoice, debit note, or other prescribed document. He is in possession of tax invoice, debit note, or other prescribed document is one condition that they have kept. Now, what do you mean by prescribed document? I have listed what are the 5 documents upon which you can take ITC. You can look at here. You can take ITC based on your tax invoice or revised tax invoice. You can take ITC if you have your debit note, invoice under RCM together with payment of taxes, document by input service distributor. If you have imported goods, while you import goods, you will pay 2 taxes. One is customs duty and IGST. If I purchase goods from America and then import it into India, I would pay customs duty and IGST on top of it. That IGST also I can take ITC, and the document that I require is something called as bill of entry, which is a customs document. These are the 5 documents upon which you can take the input tax credit. The first condition says that you should be in possession of an invoice. In your examination, how this would be tested? In an examination question, they would tell you that you purchased certain goods. There was a 10 invoices that you have. Out of this 10 invoices, 2 invoices went missing. Total GST on the 10 invoice was 1,50,000. On the 2 invoices, it was 20,000 GST that was there. How much ITC you can take in that month? Can you take full 1,50,000 even after 2 invoices went missing? No. You can take ITC of only 1,30,000, because if the invoice is missing is given in your question, you would say that you are not eligible to take ITC of that. That will be the impact of this first wordings. Clause B says it is not enough that you have the invoice. You should have received goods or services for you to take ITC. So second condition that is to be satisfied by recipient is he has received goods and or service. I have elaborated that in my notes here. Condition number 2. Receipt of goods or service is a condition for you to take ITC. 3 notes are there. I'll show you some example also so you understand it better. Note number 1 says ITC can be taken in the month in which goods or service are received, provided all other conditions are satisfied. I got the bill in January. I have received the goods only in March. When can I take ITC? Only in March I will be able to go and take ITC. Why? To take ITC, you should have received goods or services. What if goods are received in lots or installments? ITC can be taken only upon receipt of last lot or installment. Multiple examination they tested this. Or how they will test this? They would say there was a bill in January. Okay, I made a purchase in January. There was a bill. 10,000 kg was the product I wanted to purchase in that bill. But I got this 10,000 kg in 4 lot, 4 installment. 4 times the goods are coming in different lorries. The first came in Jan, second came in Feb, third came in March, and fourth came in April. Can I take proportionate credit each month to the extent of goods I received in the invoice? Can I take 25% in January, 25% in February, 25% in March, 25% in April? Not possible. You can take the entire credit only in April when you receive the last lot of item. Is what is given. So they generally give you, generally your computation of GST is on a monthly basis. They'll ask you to compute how much ITC can be taken in January. Then they would say that in January they made a purchase, they have the bill, but goods are coming only in lot. Only first lot they received in January. Can they take ITC in January? No. This is how they'll test it in the exam. They'll give you some hint in the exam question where they would say goods are received in lots and I have not got the last lot in this month. Third one. Let's look at what is this third one says. If a third party receives, being an agent or not, goods or services on behalf of registered recipient, it is deemed to be received by registered recipient, and registered recipient can take ITC in the same month on which goods or services received by third party. What is the meaning of this? Let's look at the understanding of this. I'll give you an example. So this particular area talks about bill to ship to invoice. It's a type of an invoice that we have called as bill to ship to invoice. So look at this example. Louis Philippe is a company which is there in Bangalore. Louis Philippe is purchasing certain cotton raw material from cotton mill which is located in Coimbatore. This cotton mill has given an invoice to Louis Philippe in January month, and Louis Philippe paid money also 1 lakh plus 18,000 rupees GST, 1 lakh 18,000 paid. Now Louis Philippe is doing the design of their shirts and clothes, and then they are giving this clothes to a job worker in Tirupur and asking them to stitch and then give it back. So they called up, Louis Philippe called up the cotton mill in Coimbatore and said, see, don't deliver the product to us. We paid you, you gave the bill to us, don't deliver the product to us. Deliver the product directly to a job worker, which is a tailoring shop that we have, which is in Tirupur. If you give it to Bangalore, I have to send it again to Tirupur, which is going to increase my transportation cost. So the cotton mill, what they have done is the cotton mill directly sent this product to the job worker in Tirupur, and job worker has received this product in February. After stitching, job worker transferred this goods to Louis Philippe. Question here: who's the person? Who's the person who wants to take the input tax credit here? Who's going to take input tax credit here? It is Louis Philippe, because they are the one who purchased the product. Question to you guys would be this: when can Louis Philippe take the input tax credit? Can Louis Philippe take the input tax credit in April only, because they should have received the goods? They said they can take it in February. Why they can take it in February? Because when job worker received it, they received it on behalf of Louis Philippe. So if a third party is receiving the goods on behalf of Louis Philippe, it is as good as Louis Philippe received, and thus condition of receiving goods or services satisfied is the clarification they have from the third point. So two conditions that we have looked into. Let's look at. So we have looked into clause A and clause B. You should be in possession of invoice. Clause B says that you should have received goods or services. Now let's look at an additional condition that we have called a 16(2)AA. You can see here. They're saying that it is not enough that you're saying you're in possession of invoice. There's an additional condition which is kept as a cross-checking mechanism. Yeah, there's an amendment here also in terms of the format of invoice and everything, which we will discuss in detail. So look at this. What is 16(2)AA says? 16(2)AA says it needs to be read with rule 36(4). It says details of such invoice or debit note. So what do you mean by such invoice or debit note? Whatever you have mentioned in clause A, which is he is in possession of a certain invoice or debit note or other prescribed document. This invoice or debit note should have been furnished by the supplier in GSTR 1 or IFF. Now they have added a wording GSTR 1 or GSTR 1A. They said there is something called 1A they have introduced. So it could be GSTR 1 or 1A or IFF. And the same have been communicated to the registered person as per section 37, which says that it should be communicated to them in GSTR 2B. Then only they can take the credit. So this brings a cross-checking opportunity for the government. When somebody is saying that I have made a purchase and I have the bill, how will the government know whether you really have the bill? They said your supplier, you're saying that you purchased something, right? Your supplier should have uploaded this particular document in their GSTR 1 or used IFF, and it should be reflected in the GSTR 2B of the recipient. To understand this, we need to go and then have quick discussion on something else. Look at this. To understand what is GSTR 1, 2B and IFF and all that, if you are good at your return structure, then you will understand this quickly. If you have gone for diminishing marginal utility curve, then you will have a slight problem in understanding this, because this return comes as the last chapter. So a lot of us does not generally look at this chapter with all the required focus. So I will give you a quick recap. Okay, carefully listen. I'm also trying to cover something on procedure with this. Every registered person will have to go and do two filings on a monthly basis. One return called as GSTR1, which is there in section 37. And there is another return called as GSTR3B, which is 39 subsection 1. What is section 37 says? It talks about a return on outward supply, GSTR1. And GSTR3B is called as summary return. GSTR1, a return on outward supply, 3B is summary return. These are the two returns that needs to be submitted by every person, except special registration like composition levy scheme will not file this, TDS, TCS registration won't file this, input service distributor won't file this, OIDAR, like online, automated online service providers won't file this, NRTP won't file this. All others, normal registered persons will file GSTR1 and GSTR3B as two returns. Now, these two returns in GSTR1 is just an information return wherein they upload the invoice details to the government to do the cross checking. What is GSTR3B? GSTR3B is where you pay the taxes. So we have done a net GST computation question in the previous segment. Exactly likewise, you have a return called GSTR3B, wherein you will have table 1, 2, 3. Likewise, there are multiple tables you will have to fill, but you fill the consolidated information. Like you will fill what is outward tax liability through this, you will fill what is your ITC, and then you will pay the net GST. So the payment of taxes is generally aligned with this return called as GSTR3B. Right? So what is the due date of 3B? Will be the due date of your payment. So what is normally the due date of 3B? 20th of next month. What is the due date of payment? 20th of next month. Likewise, you can imagine this and then understand. Right? Okay. Then, so if you look at that, I would like to give you a little more understanding on GSTR1 now, because there's an amendment that we have there. So in case you don't have this chart, I would again recommend you to just take a photo of this and then keep it with you, because there is an amendment here. You might get a question on this as well. What information do you have to submit in your GSTR1? GSTR1 is called as return on outward supply. GSTR1 is called as return on outward supply. It's an information return wherein you give the information. So to understand what information to be given in GSTR1, you classify your invoices into two categories. One is B2B invoices, another one is B2C invoices. What do you mean by B2B invoice? What do you mean by B2C invoice? B2B invoices means invoices given by a registered supplier to another registered person. So I have GST number, you have GST number. The bill will be called as B2B invoice. So in the invoice, the bill will have GST number of supplier, will also have GST number of recipient. That's called B2B invoice. What is special about B2B invoice? This is the bill where ITC will be claimed. Why? Say I have a GST number. I have a GST number. So I am going to claim, I'm going to bill you with the GST. I'm giving you a bill, I will add GST. You have a GST number, so you're going to take the credit. So they said, look at the first branch here. If you have B2B invoices, you are supposed to report the entire invoice information. The specified field in the invoice needs to be reported to the government. So I have to tell my GST number, recipient's GST number, what is the value, what is the GST, all this information has to be uploaded invoice wise. I have to write down, think about an Excel sheet wherein I have to have each row of invoice details and I have to upload it to the government. So in India, every B2B invoice information will be given to the government. What is the due date of filing this? Normally, if you are monthly filing, there is something called as QRMP, Quarterly Return Monthly Payment Scheme. If you are not under that, if you are on a monthly payment, monthly return scheme, then you will do this return on or before 11th of subsequent month. So whatever return that you need to, whatever invoices that you have issued in the month of March, say March 2025, for whatever invoices from 1st March to 31st March, whatever B2B invoices that you have generated, you have to submit this information to the government on or before 11th of February. This is your understanding, right? In GSTR 1. Both intra and inter B2B has to be invoice wise details. Now, what if it is B2C? If it is B2C means unregistered customer is purchasing it. And I know that this unregistered customer is not going to take credit. So they said, if it is B2C, you look at whether it's intrastate supply or an interstate supply. If it is intrastate supply, you have to consolidate rate-wise consolidated information is to be provided to the government. Consolidated information, which means all your intrastate, say I have sold 50 bills within Tamil Nadu. I'm in Tamil Nadu with 50 bills within Tamil Nadu have given. Or I'm in Andhra, I've given within Andhra 100 bills. So my information would be in this 100 bills, how much is 5%, how much is 12%, how much is 18, how much is 28. Consolidate and then give one line information. That is enough. Then, if it is interstate, there's a slight amendment there. Interstate B2C are classified further for GSTR 1 into B2C large and B2C small. What is considered to be B2C large? From 1st August 2024, this is the amendment that we have. 53rd Council meeting has amended this B2C large definition and said, if it is B2C large, it needs to be, if it is B2C large, it needs to be more than 1 lakh in value. Say I have given a bill to an unregistered customer. I'm located in Tamil Nadu. One customer from Rajasthan came to Tamil Nadu and then purchased. Or one customer from Rajasthan has given an order and I send the product to him. And it is B2C, unregistered guy. Then, Rajasthan, I'm selling it. If it is 2 lakh rupees, I have to give this information of the invoice separately to the government because it will be treated as B2C large. Till 31st of July, that limit was 2,50,000. Now it is reduced for your exam onwards. It will be reduced to 1 lakh. So that information has to be invoice-wise details are to be given in that case. Exact 1 lakh or less than 1 lakh will be called as B2C small. There, invoice value is less than or equal to 1 lakh and consolidated information is enough. State-wise, rate-wise. Say from Tamil Nadu, how much I sold to Karnataka. In Karnataka, how much is the total of 5%, 8%, 12%, 18%, 28%. That's all information I have to give. It's called consolidated state-wise, rate-wise information to be reported. This is the amendment that we have. So overall understanding of this is that when somebody is filing GSTR 1 and it is B2B, they will upload their information in GSTR 1. Government knows this information by 11th of next month. So whatever invoices, whatever purchases I made, say I'm a registered person, whatever purchases I made in the month of March, government knows this information of my purchases in April 11th because the person would have already uploaded this information in April 11th. So government knows this, right? Government says that you have to, okay, government knows this by April 11th. They say that if you want to take the credit, in which return I will take the credit? Is the GSTR 1 used as a return for availing credit? No. GSTR 1 is only a return on outward supply. My availing credit is done through a return called as GSTR 3B. If you want to take the credit of your purchases, whatever purchase you made, you cannot just say that I have the bill, I'll take the credit. That bill needs to be uploaded in GSTR 1 of your supplier. And how will I know whether he uploaded it or not? It will be reflected in an auto-generated statement. An auto-generated statement called as GSTR 2B. I have to go to my GST portal, login, and then click on a return called as GSTR 2B. If that bill which I am claiming that I have with me should be reflected in 2B, then only I can take the credit. So this enables the government to do a cross-checking mechanism. Now go back to the condition and then read it once again to get it. Details of such invoice or debit note have been furnished by supplier. Now, I already told you about GSTR 1. Now, after filing GSTR 1 till 3B, you have an option to additionally upload or change some information using GSTR 1A. So, you have an option to go for GSTR 1A. In 1A also, they can actually upload. So, that's a latest amendment. They said that you can actually update this information using GSTR 1A. In 1A also, you can upload, or if you're under QRMP scheme, you have an option to upload using an additional facility called as IFF, Invoice Furnishing Facility. Either using any of these three methods, the supplier can upload. If they upload, it will be reflected in your 2B. If it is reflected in your 2B only, you can take the credit. How this will be tested in an examination question? I'll take you through a question to understand this. Look at the question on the screen and let's read it with me. Ringim Sales, a registered supplier, receives 100 invoice for inward supply of goods or services involving GST of 10 lakh from various suppliers during the month of January. Out of 100 invoices, details of 80 invoices involving GST of 6 lakh have been furnished by the suppliers in their respective GSTR ones filed on the prescribed due date. Therefore, and such details have been duly communicated to the recipient of such invoices in GSTR 2B. Compute ITC that can be claimed by Rimjim Sales in GSTR 3B for the month of January 2022 to be filed by 20th of February, assuming that GST of rupees 10 lakh is otherwise eligible for ITC. Read the question and tell me how much ITC they can take. How many invoices they have on purchase? They have purchased 100 invoices, right? They purchased 100 invoices. Out of these 100 invoices, how many invoices are uploaded by their supplier? Only 80 invoices. Total 100 invoice had 10 lakh GST credit. So they were expecting I'll take 10 lakh credit this month. But what happened? You will not be able to take 10 lakh credit because out of this 100, only 80 uploaded by your supplier and reflected in your 2B. So there are 20 invoices not yet come to your 2B. You can take the ITC only when it reaches your 2B. So you can take only a credit of 6 lakh in the month of January. Balance 4 lakh you can take only in the month in which they upload and reflect in your 2B. This is your understanding. It is not like you will never be able to take. You can take, but government is expecting you call up those people. Why they are not uploading? Ensure that they upload, then only you can take the credit. Are you guys understanding? Can I have a quick thumbs up if this is clear to you? All right. So let's move to the third condition that we have here. Now, this third one is slightly tricky condition. Huh? It is not practically possible to identify. Now, the first three condition I've already discussed, which is you should be in possession of invoice. Second, yeah, the recipient should have received the goods or services, and it should be uploaded and reflected in your 2B. All of this you can check and then identify. Look at the third condition, that is clause C, maybe fourth condition in our list. Tax should be paid to the government by cash or through utilization of credit. I made a purchase. I would have paid taxes if it's under FCM. I would have paid the taxes to the supplier. Now the supplier fellow will have to pay to the government. How supplier can pay? Either supplier can pay by cash or he can take his credit and then set off and then pay. Either way, it should reach the government. How will I ensure that? That's not possible, right? I go to a shop, I pay GST. So you go to a shop, you whenever you're paying for supermarkets, you can see in your bill there is GST. Can you go and then check whether they paid it to the government or not? There is no possibility to do that. But they're saying that government is very fragmented in their thought. The government is saying that I would give you credit only if I get the taxes. Okay, you purchase from someone, you're saying that you paid GST. He did not pay to me, means I will not give you the credit. How will I know whether he paid or not? Then what's your role, government? If I have to do everything, why are you there? Okay, I have to collect from him and then ask him to pay to the government or what? So government understood this and they said it's not practically implementable. So they slightly modified the provisions and then implemented in a different manner. That's what I have written in your in a box here. This is how practically it works, and that's done through something called as Rule 37 capital A. Additional rule was inserted for that. So when I make the purchases in that month, I will not check this particular condition. Let's look at this. ITC can be provisionally availed without checking payment of tax to the government. However, it needs to be reversed if the tax is not paid by the supplier even after the specified date. What is the meaning of it? They're saying that I will take ITC. At that time, I will not go and then check whether it has been paid to the government or not. I will check that later period of time is the meaning of this. Okay, let's look at how this would work. What is Rule 37A says? I have written that also into a chart for you. So this was tested as a theory question once, and now they can, if they want, they can test you as a practical question also. Reversal of ITC in case of non-payment of tax by the supplier to the government. Carefully read through this, you will understand. It's not complicated to understand. Rule 37A, if you have learned this already, then you will easily say that, sir, I know this stuff, because it's easy to understand. If you have not learned this before, then you would have to be with me and then try to understand. I'll take only like 3-4 minutes to teach you this. Reversal of ITC in case of non-payment of tax, which means what? I paid the tax to the supplier, but supplier did not pay to the government. Now, supplier uploaded, did he upload this in the GSTR 1? Yes, he did that. When will he pay the taxes? When he files the GSTR 3B, and he did not file the 3B is the problem there. He did not pay the taxes. So they said, for invoices or debit note, I'm reading this paragraph, for invoice or debit note which are uploaded by the supplier in their GSTR 1 or IFF, corresponding 3B is not furnished till 30th September next financial year. I purchased it in January, and he uploaded in his GSTR 1, reflected in my 2B, I took the credit, but he did not file 3B. Till what time? Till 30th of September next financial year, he did not do that. Then, recipient who has availed ITC on such invoice or debit note shall reverse the same on or before 30th November next financial year from financial year in which ITC is availed. I'm saying that if the supplier did not pay by September, recipient, I'm going to give you 2 months. After September, October, November, because I'm asking them to reverse by 30th November. If not, if you don't reverse by 30th November, interest under section 50 will be applicable if you reverse it after 30th of November. However, when supplier furnishes 3B subsequently after 30th of September, ITC reverse can be reavailed. The example goes like this. Look at the example that I've given you. Xiaomi wholesaler and MyG retailer. Xiaomi has sold a product to MyG on 10th January 2023. Xiaomi has uploaded the invoice in GSTR 1. If it is uploaded in GSTR 1, it will be reflected in MyG's 2B. So MyG has taken credit in January itself. When I say January 3B. When will January 3B be filed? On or before 20th of February. Always remember, in the examination question, when they denote January 3B, it is not January filed 3B. It is the 3B filed by 20th of February. The information in that return belongs to January, from 1st January till 31st of January. So the 3B that I file on or before 20th of February is called as what 3B? January 3B, because the information is belonging to January. The name comes from which month the information belongs to. Okay, so don't get confused there. So in January 3B, MyG has taken credit of 18,000. So MyG has satisfied all the conditions that is required. Then what happened? Xiaomi did not upload, so they uploaded in GSTR 1, that 11th of February, they have uploaded in GSTR 1, but they did not do 3B for Jan 2023. When they should have done Jan 2023 3B and then paid the taxes 20th of February, they did not do that. Okay, look at this. Now, your Xiaomi did not file the 3B for January. They should have filed by February. Any delay from February, they will have to have two implication. Two implication means two penal provision will come. Penal provision number 1, any delay in filing GSTR, any delay in filing GSTR 3B on a daily basis, they will have to pay 50 rupees late fee. How much? 50 rupees every day. Then if there is a delay in paying taxes, they will end up paying interest, and that interest happened to be 18 percentage per annum, that kind of an interest, any delay. So that is from whose end? Who will have that penalization applicable? It will be Xiaomi who has the penalization applicable. Now think from MyG's perspective. They're saying that government is saying that from January 2023, which financial year Jan 2023 belongs to? Can you put it on the chat box? Which financial year it belongs to? It belongs to 2022-2023 financial year. If that financial year any of the 3B is not filed by September next year, which means September 2023, that belongs to 23-24. No, next year, next financial year, September. So they're getting January 3B, they're getting how much time? February 20th is the due date. March, April, May, June, July, August, September. 7 months also they did not file. Then only I will go and catch MyG and then put a penalization on MyG. What is that they're saying? MyG, if your supplier did not do GSTR 3B till 30th of September next financial year, it means that government has not got the taxes. You only got the amount uploaded in your GSTR 1, but I did not get the taxes. Then I will invoke my provision. I will invoke my provision that I've given in clause C, which is tax is not paid to the government. Then what will I ask MyG to do? I will ask the MyG, hey MyG, I will have a penalization for you. What is the penalization that they will have for MyG? Look at this. What is the penalization they'll have for MyG? I'm asking MyG, even after 30th September, if Xiaomi did not file their GSTR 3B, I will ask the MyG to reverse the credit that they have taken. To do the reversal of this 18,000, I'll give them 2 months. After September, October, November. Before 30th of November 2023, they have to reverse it. If they reverse it by 30th of November, what will not be applicable to them? Interest will not be applicable. If they reverse it after 30th of November, they will have to even reverse it with interest. This is a provision then. Now, how will MyG know? After 30th of September, all those people who had GSTR 1 uploaded on the same month will get a email from GST portal. In this email, they would say, see, MyG, you remember in January you have taken a credit now? Yeah, I remember. It was uploaded in your 2B? Yeah, I remember. That fellow whom you got the bill from, that fellow did not file January 3B. So your tax did not come to me. So I'm asking you to reverse the credit that you have taken. If you don't do that, then you will have interest implication. Then what MyG will do? MyG will immediately call Xiaomi and say, hey Xiaomi, what are you doing? Pay all this. Xiaomi say, no, I have to pay interest late fee. No, I don't care. I will not purchase from anything. That's what the expectation of government. I'll not purchase from you anything if you don't pay this money, because I'm losing my credit and I paid you everything. You have to manage it. Now, for me, after taking all the efforts, finally look at this part here. Finally in December 2023, they filed their GSTR 3B with all the interest, late fee, everything. By then, by 30th of November, MyG had reversed the credit. But in December, what MyG can do? Re-avail 18,000 as credit again. Are you guys understanding the provision that we have here? This is called, if tax is not paid. So now you read this, you will understand. For invoice or debit note which are uploaded by the supplier in GSTR 1 or IFF, corresponding 3B is not furnished by 30th September, recipient who has availed ITC will have to reverse before 30th November. If not, interest will be applicable. However, when supplier furnishes 3B subsequently after 30th September, ITC reverse can be re-availed. This is what is the provision that we have now. Then the clause D that we have says that return under section 39 is to be furnished. You have to file your GSTR 3B, who recipient. What do you mean by availing credit or claiming credit? To claim credit, you have to file your return and then avail the credit. This is what is the provision that we have as a condition there. So 16 subsection 2 has one more condition which says that such ITC communicated is not restricted. Even after you satisfy all these 5 conditions, if the government wants, they can restrict your credit. There's a provision that they have given like that. So 16.2 has 6 conditions. We have looked into all the 6 conditions. Now we will look at only one additional provision that we have there, which is called as payment condition for availing ITC. This is a small condition that we have. Let me just quickly read it for you. Payment condition for availing ITC says what? If payment of consideration, that is value plus tax, is not paid within 180 days from the date of invoice, ITC already claimed needs to be reversed and added back to the liability for the month in which 180 days expires with an interest. Once payment is made after 180 days, ITC reverse can be reavailed. The time limit for claiming ITC under 16.4 is not applicable in such cases. There are 3 exceptions where this 180 days condition will not be applicable when tax is paid under RCM. There is supply without consideration, and amount is added to value under 15.2b. So what we will do is that after we look at 16.3 and 16.4 and the amendment under 16.5 and 6, we will come back to this payment condition and then give you an example to understand this in full. So in 16.2 conditions, we can park it as like done. Okay, so now we will have to look at the amendments part, but before that we can take a quick break. All right, so I would do 16, 3, 4, 5, 6 and then come back to this payment condition. We can quickly finish this off. 16.3 says that if depreciation is claimed on the tax component, then ITC is not allowed. And 16 subsection 4. Okay, what is depreciation is claimed? Depreciation is claimed on tax component, then ITC is not allowed. What is the meaning of that? If you want, I can quickly put you through an example. Say I purchased a machinery, right? Value is 10 lakh. GST is 18%. So I would have paid how much? 11 lakh 80,000. I paid this much to purchase a machine. It is a capital goods. While purchasing this machine, I've paid this much amount. Question is, how much should I capitalize in machinery account and how much can I take it as input tax credit? They're saying that if you capitalize 10 lakh into machinery account, if you capitalize 10 lakh into machinery account, you will be able to take 1,80,000 into an ITC account. But if you go ahead and then capitalize, the entire 11,80,000 to machinery account, you will start claiming depreciation on 11,80,000, which means you will take depreciation benefits even on the 10 lakh, which is the even on the 1,80,000, which is the ITC. So if you go capitalize 11,80,000 including ITC into machinery account and then claim depreciation benefits, you cannot take ITC also on the 1,80,000. Take only one benefits. In an examination question, how they will test this? They would test in an examination question. They would say that they made some purchases of some machinery and they have claimed ITC even on the, they have claimed depreciation even on the tax component. Then you should not take ITC. But in some cases, say for example, somebody purchased a car. This particular car has, if you look at the car, has no ITC available because it's a blocked credit. Say I purchased a car which is 15 lakh plus 5 lakh GST. How much will you capitalize in your asset account? You will capitalize entire 20 lakh because you anyway don't have an ITC. This is how the depreciation benefits would be there. So depreciation benefits is a benefit in income tax. ITC is a benefit in GST. Both of them you cannot claim on the tax component. Either take ITC because it's going to be an ITC, don't add it to the cost. You would have learned this again in PP, your accounting standard, that refundable taxes should not be capitalized. That's the thought process. Okay, then 16 subsection 4. This is where you have the amendment. Okay, I'll in detail explain you amendments and everything, but before that, let's look at the basic provision. 16 subsection 4 says, on an invoice pertaining to a financial year or debit note relating to a financial year, for an invoice or a debit note pertaining to a financial year, you can avail ITC on or before the earliest of following dates. That is 30th November next financial year or actual date of filing annual return, whichever is earlier. The due date of filing annual return happened to be 31st December next financial year. Due date. Beyond 31st December next financial year, if you file annual return, you will end up paying late fee. What is an annual return? You file your return on a monthly basis in GST. After the financial year is over, you prepare an annual books of accounts. So your books of accounts cannot be compared with monthly returns. Your turnover in the books of accounts cannot be compared with monthly returns. To ensure that you have a return what you can compare with your books of accounts audited, they said you prepare all your monthly return into a one single return after the year is over, called as annual return, which needs to be filed on or before 31st of December. Now, you file this return in November. You can file it in November, October, August, July. If you're all well prepared, you have all the details, you can file it much earlier. If you are somebody who's filing these return much earlier, that you're filing it before 31st of December, much earlier, then the date on which you file this annual return is the last date of claiming your ITC, whatever missed out in the last financial year. If you have not filed annual return before 30th of November, then 30th of November, whatever 3B you file, you can claim your ITC on the missed out invoices. Say April to March is the financial year. April, I have made a purchase. I should have taken ITC of this purchases in April 3B, which is going to be filed on or before May 20th. Suppose I did not do that, then I will claim it in May 3B. If I did not claim it in May 3B, June 3B, July, August, September, any of the 3Bs in that financial year I can do. I can even take the credit of these invoices in the next year, April 3B. Likewise, still the 3B that I file on or before 30th November next financial year is the understanding of it. But if you filed annual return even before this, then your due date will be ending by, or the last date which we can take ITC would be ending by the date of filing annual return. So the wordings that we have used is 30th November next financial year or actual date of filing annual return, whichever is earlier. So we can also say max you can claim ITC by 30th November next financial year. Beyond that is not allowed, because date of filing annual return will be relevant only if the annual return is filed even before 30th November, because whichever is earlier is the wordings that we have used. I'm going to easily put you through a question so that you will understand this much better. I'm doing this because this is an area that can be tested in your exam, considering there is amendments coming up. Look at the question that you have here. Question 36. Mr. Raju made an inward supply on 10th October 2022. Your time limit is for all the invoices for a financial year remains the same. So Mr. Raju made an inward supply on 10th October 2022. First, you should look at which financial year this invoice belongs to. It belongs to financial year. Which financial year? Can you type it on the chat box? 22-23. What is the last date for claiming ITC for this financial year? It is 30th November next financial year. That is 2023-2024, which is 30th November would be in 2023. Or date of filing annual return. There was a confusion on whether he can avail ITC. Come with the last date before which he should avail ITC so that he does not lose the ITC because of the time limit. First, we have to look at when did he file the annual return. Annual return was filed on 30th October. So 30th November or 30th October, whichever is earlier. So what will be the time limit? 30th October would be the time limit. If there is no annual return submitted, then the time limit would be what? It will be date of, there is no the annual return filed, which means that earlier of 30th November annual return, early date would be 30th November 2023. This is how you compute it. Look at question 37 here. It talks about an additional note that we have there, but we can quickly look at this question itself. Xiaomi has issued an invoice with GST of rupees 1 lakh on 20th of March 2023 to MyG retailer. MyG has duly availed ITC on the March itself. However, later Xiaomi issued a debit note on the invoice mentioned above on 25th May 2023 with interest of delayed for with an interest or for delayed payment of consideration carrying 15,000 value 2,700 GST. MyG retailer wants to avail ITC on the GST paid on interest mentioned in the debit note issued. What is the last date before which MyG can avail ITC on the GST in debit note, assuming no annual return is filed? Confusion that we have here is original invoice happened from Xiaomi to MyG was on 20th March 2023. There was a GST credit of 1 lakh in that. Later, because there is a delayed payment of consideration, there was an interest that was paid, which has a value of 15,000 and GST of 2,700. There was a confusion. Should I have separate time limit for original value and separate time limit for original invoice and separate time limit for debit note, or debit note ITC will be computed based on invoice date? This is what is clarified by the point that I have given you in the notes, which is, let's just read that point, then come back to this question. Look at note number 1 here. Earlier, debit note date considered was corresponding invoice date. Now, debit note ITC time limit is based on debit note date itself, which means if you have a debit note, in our example, debit note was given on 25th of May 2023. My time limit should be computed based on debit note date. So invoice date was 20th of March 2023, which belongs to which financial year? 22-23. Debit notice date is 25th of May, which belongs to which financial year? 23-24. What will be the time limit, assuming annual return is filed after 30th of November? What will be the time limit? The time limit for claiming ITC on this invoice would be 30th November next financial year, that is 2023. For debit note, the time limit would be 30th of November next financial year, which is 2024. So debit note time limit is based on debit note date itself. Again, please note, time limit is only there for availing ITC, not for utilizing ITC. Availing ITC means whatever invoice you have to claim this ITC in your GSTR 3B. That is the time limit that we are talking about. Are you guys understanding? Is it clear? Can I have a quick thumbs up if this is clear? Okay. Now let's slowly look at one clarificatory circular that we have, which is also slightly tricky for you to understand if you don't know the document structure in GST. So let me read that for you first. I've highlighted it here. Time limit for claiming ITC on invoice under RCM under section 31(3)(f) will be based on the respective invoice date of the same. So to understand this wordings, you should understand what is 13(3)(f) invoice under RCM. Let's try to understand this structure, how the documentation would work under RCM. I'm putting it across to you for understanding. Look at this carefully. How the documentation would work in RCM. So this is why, see, look at everywhere RCM is being touched. So to understand your structure of discussion, that's why I always say charge should be something that you might want to look at first. Look at this. The example I have quoted here is from recovery agent to a bank. Say, a recovery agent has provided services to a bank. Commission is 1 lakh. Now, there are two possibilities that the recovery agent could be registered or unregistered. In both cases, the documentation structure would be completely different. Case number one, I'm assuming this recovery agent is registered. Then, recovery agent will give bill for how much? Value is 1 lakh. GST is 18%, 18,000 rupees. With me? But how much money will be paid by bank to the recovery agent here? Only 1 lakh will be paid. Why? Because 18,000 is to be paid by the bank under reverse charge mechanism, which means also what? The bank, while making payment to the recovery agent, will issue a document called as payment voucher. You can see here I have written a document called payment voucher, which is mentioned under 31(3)(g). So every recipient under reverse charge, when he is making payment to the supplier, he will issue an additional document called as payment voucher. This is document number one. Here, bank will pay tax under RCM. So tax is paid by the bank under reverse charge. I have written on the edge. And after paying this, the bank can take the credit. They have to pay this 18,000 by cash and then take the credit. Now, to take the credit, what document will be referred by the bank? The document here referred are normal document of tax invoice issued by the supplier itself, because that GST is mentioned there. The time limit will be based on the normal tax invoice that we are now discussing under 16 form. Case number 2 is where it is slightly important. That's why there is some clarification they have given. The same transaction I'm slightly modifying. What is the modification here? Recovery agent is providing services to the bank and the commission is 1 lakh. However, suppose the recovery agent is unregistered. Even if the recovery agent is registered or unregistered, the tax needs to be paid by the bank under reverse charge. If the recovery agent happen to be unregistered, the recovery agent will collect 1 lakh rupees commission but will not issue an invoice. Why? Because he is unregistered. In that case, for the bank to take input tax credit, what is that the condition says? There should be in possession of an invoice, right? What invoice he will have? Because the supplier is unregistered, he is not issuing an invoice. In that case, the bank will have to do self-invoicing. What is self-invoicing? Here, the bank will pay how much money to recovery agent? 1 lakh rupees. At the time of paying this 1 lakh rupees, there will be a document called as payment voucher that is being issued. Right? There will be a document called as payment voucher that is being issued. Now, this payment voucher will contain 1 lakh rupees. That is the amount that is paid to the recovery agent. Now, beyond this particular payment voucher, after paying this 18,000 by cash, the bank wants to take the input tax credit of it. Now, to take the input tax credit, bank needs to have an invoice. Here, the recovery agent cannot issue an invoice because recovery agent is not registered. In that case, bank by itself will issue an invoice and keep it with them. This in GST is called as self-invoicing under 31(3)(f). You can see I have written it there. Self-invoicing. Bank will have to prepare an invoice under 31(3)(f). We also call this as an invoice under RCM. In that invoice, bank will mention that I have received a service of 1 lakh and the GST was 18,000. I paid it under RCM and then taken the credit. So the document by which the bank will take the credit would be invoice under RCM, which is a self-invoice, plus after paying the taxes under RCM, they will take the credit of the same again. Now, bank needs to avail ITC, right? What will be the time limit for bank to take ITC? 30th of November or date of filing annual return, whichever is earlier. In that particular time limit, I don't have an invoice to check. Invoice is not issued by recovery agent. The time limit in this case will be based on the invoice issued by bank itself. Is the meaning of that second note that we have looked into. Let's look at the second note, what it says. The time limit for claiming ITC on invoice under RCM under section 31(3)(f) will be based on respective invoice date of the same. What is the meaning of it? Whatever invoice, that self-invoice that is issued by the bank, that self-invoice, they have to look at the invoice date, financial year, next to financial year before 30th of November, they have to claim the ITC. So means what? Even for the GST paid under RCM, they have to claim it before the time limit. This is the understanding that you have. Is it clear to you? Suppose they have done the self-invoicing in January 2024. Which financial year belongs to? 23-24. They have to claim that RCM ITC on or before 30th of November 2024 will be the understanding. Which clear? Can I have a quick yes on the chat box from everyone? Okay. So this small thing, again I'm saying there is a bigger amendment in this, so these small things can also be tested in your exam. Again, for May exam, this is applicable. Now let's look at what is this amendment of 16.5 and 16.6. So I'm going to show you a chart, which I want you to, like, if you don't have this chart with you, you should ideally take a photo of this and then keep. So the Second Finance Act in 2024 has inserted two additional sections after section 16.4 called 16.5 and 16.6. What is this 16.5 and 16.6 says? 16.5 is a one-time kind of a provision. So chance of you getting a question in 16.5 is very, very rare. 16.6 for that reason could be a question that can be most likely to be there in your exam. It says that 16.5 says that for invoice or debit note pertaining to following financial year. They're saying first for financial year, that is financial year 17-18, 18-19. When was GST introduced? 2017 July 1st, which belongs to which financial year? 17-18, 18-19, 19-20, 20-21. For all this financial year, they have given one extended time limit. They said, I will give you the, I will allow you to take the credit for all this for financial year till 30th of November 2021. That the last financial year, that is financial year 2021 time limit is 30th of November 2021. That time limit is given to all the four financial years. Is the first amendment that we have under 16.5. So it says that ITC for invoices belonging to this for financial years can be availed using return under section 39. That 3B you file before 30th of November 2021. So nothing more to learn there, just for one-time provision for you to get an extended time limit. However, 16.6 is something that is little tricky, very tricky to read from your amendment material. So I have given you an easy chart for you to look at and then easily understand this. I'm going to give you an example also for this, considering that I'm going to take it like a regular session here because it's an amendment. It's a new portion for most of you who are sitting here who did not attend the regular classes of mine. So I'm going to take it very slow and then give you an overall example also. And I'll strongly recommend you to keep a photo of that example as well with you. It's a new provision. So everyone should focus on the screen and listen to me and then answer all the questions that I'm asking. Read it with me here, because if you don't have it in your books, you should read it on the screen and try to understand it now itself. Okay, can I start? Okay. Where registration is cancelled, 16.6 says that where registration is cancelled under section 29 and revoked under section 30 or by appellate authority, appellate tribunal or court. There are two types of cancellation under section 29. One cancellation is called as voluntary cancellation, which means that whoever is a registered person who has obtained registration, he himself is going and then cancelling his registration. Why would he cancel his registration? Because he feels like this registration is not required. He's closing his business, selling his business. All these reasons could be wherein he himself would go and cancel his registration. In section 29 itself, there is one more cancellation, which we name it and then call it as suo motu cancellation. What is a suo motu cancellation? It's called as suo motu cancellation means cancellation that is done by the officer. Why would the officer cancel your registrations? Because there are 5 reasons that 5 scenarios where 5 different type of reasons where they can cancel your registration. To give you a simpler example, you did not file the returns. You did not file the returns for a continuous 3 tax period, for example, or you have not filed the returns for 6 continuous months. Not 3 tax period, 2 tax period in QRMP, 6 continuous months, or you have given a fake invoice, or you're not conducting business from the declared place. You're taking ITC more than that you are actually allowed to take under 16. So there are multiple reasons where you contravene the provisions. What can be done? The officer can come and then cancel your registration, which we call as suo motu cancellation. Only in case of suo motu cancellation, when the officer comes and cancels your registration, there is an option available. There is an option available for you to go and then apply for revocation of cancellation. What is revocation of cancellation? It is like requesting your officer, proper officer who cancelled your registration, to give back your GST number. In that cases, your time limit will be computed under 16.6, not under 16.4. What is the case that you're talking about? Your registration is cancelled and it is revoked under section 30. You requested and then they revoked the cancellation and then gave your GST number back. It is like, reliving with your GST number. It was cancelled, the cancellation was removed, and then you got the GST number back to you. So where registration is cancelled under section 29 and revoked under section 30, okay, in that particular case, okay, if it is not possible to revoke under section 30, to revoke under section 30, there is a time limit called as 270 days. You have to apply for revocation within 270 days. You have not applied within 270 days, then you will have to go through either an appellate authority, appellate tribunal, or court route. AA, AT, and court. AA is appellate authority, like commissioner appeal. Appellate tribunal, you have to go to a tribunal, or you can go to High Court and Supreme Court and then get your GST number back if it's a genuine case. So we're talking about cases where your registration got cancelled and it got revoked. What is the only type of cancellation where you have an option for revocation, which is suo motu cancellation? You yourself applied for cancellation, you can never get it back. You will have to apply for a new GST number. So in that case, the time limit for claiming ITC is not expired at the time of cancellation. What happened? Your registration got cancelled before 30th of November. So you had option to go and then avail ITC, but your registration was cancelled, so you could not take ITC. But after 30th of November, which means after your time limit is expired, you got your GST number back. And because of this reason, you're not able to claim ITC on a previous period. So they said a new time limit of ITC will be applicable for invoice or debit note. In that case, what will be the new time limit? It will be later of normal time limit. What is normal time limit? 30th November next financial year, or date of filing annual return, whichever is earlier, or you can do it within 30 days from the order of revocation of cancellation, whichever is later. I'll give you another examination tip. The moment there is something on cancellation in the examination, all your time limits are whichever is later. You go to any areas in cancellation, your all time limit would be whichever is later. Okay, that's an exam tip that you can remember. The question is on cancellation. You have multiple dates you don't remember. Take the last date and then write your answer would be correct. Okay. Now, let's take an example to understand what is this. This example I said like might be useful for you to keep a photo with you. I'm putting dates. You have to carefully analyze, then only you will remember this. But this is going to be super important for your exam. Mr. Raju made an inward supply on 10th February 2023. Value was 2 lakh, GST was 24,000. 10th February 2023 means you should have taken ITC in February 3B, which you file on or before 20th of March. He did not do. Why? There was a confusion regarding whether ITC is allowed or not. So he did not take ITC, he waited for that to be clarified. Meanwhile, the officer made a suo motu cancellation of Raju's registration. When was his Raju's registration came in? 31st of August 2023. Which means it was September, October, November, 3 more months where he could have taken ITC of this invoice, because this invoice belongs to which financial year? 22-23. He could have taken ITC on what date? 30th of November 2023. But his cancellation came on what date? It came on 31st of August 2023. So 3 months he was short. What Raju did, the moment he got a cancellation, he applied for revocation of registration on 10th January 2024. He can apply it normally 90 days from the order of cancellation. With an extension, another 180 days would be added. In total, 270 days time he can take. Raju applied for revocation of registration on 10th Jan 2024 and order of revocation came on 20th of February 2024, restoring Raju's registration. He got his GST number back, which was lost by 31st of August 2023. He got it back by 20th of February 2024. But what happened in between? 30th of November 2023 got over by that time. Are you guys understanding? Yeah. Now the question is, if that is the case, what will be the time limit that will be applicable for Raju to claim ITC on this 24,000, which was on an invoice on 10th February 2023? So the time limit will not be a normal time limit. Normal time limit means what date it would have been? 30th November 2023. But his GST registration was cancelled at that time. He could not go and then take ITC. So they said, I will give you another time limit to compare, which is 30 days from the order of revocation, which came on 20th of February. So your revised time limit will be computed like this. To find out the time limit for claiming ITC on inward supply, 16.6 would be applicable, which says that time limit would be later of normal time limit, which is 30th November 2023, or 30 days from the order of revocation. Revocation came on 20th of February 2024. 30 days if I add there, 8 days in February, ignore in leap year, I'm adding 22 more days in March. So 22nd of March. Before that, you can actually go and then take the ITC. So normal time limit would have been 30th of November. In this case, it will be 22nd of March 2024. Are you guys understanding this? Because now Raju has an option to go and then take ITC even beyond 30th of November because of this special scenario that we have here. I hope this is clear to you. Can I have a quick thumbs up if this is clear? Suppose Mr. Raju has, I'm adding a little more complication into this scenario. Suppose Mr. Raju has another purchase on 10th August 2023. What will be the time limit for claiming ITC? 10th August 2023 belongs to which financial year? 23-24. What is the time limit for that in normal cases? It is 30th of November 2024. So in that cases, so his registration was cancelled on 31st of August. Yeah, he did not claim it in August because he got the registration back only on what date? 20th of February 2024. So again, how will I compute in 16.6? Normal time limit is 30th November 2024. 30 days from revocation is 22nd March 2024. The time limit which is later is 30th November 2024. Normal time limit is later than the 30 days from the revocation. I will take the normal time limit itself. Third case. Mr. Raju has one more invoices on 10th January 2022 for which he has not availed ITC. 2022 invoice which belongs to which financial year? 2021-2022. What is the normal time limit? 30th of November 2022 is the normal time limit. When was my registration cancelled? 31st of August 2023. So by the time I got registration, the time limit was already over. Then will I apply 16.6 here? No. I will apply 16.6 is when I got cancellation. At the time when I got cancellation, my normal time limit is not over. So in this cases, I will not apply 16.6. I will go back to 16.4 itself. The normal time limit would come, which is 30th of November 2022. So in this case, they cannot take ITC. Are you guys understanding this? So these three scenarios can be tested in your exam as an additional case because of the amendment. Is it clear? Can I have a quick yes if this is clear on the chat box and a thumbs up from the Chennai batch? Understood? Okay. Now we can go to payment condition. You will understand it better. First, understand payment is not a precondition for availing ITC, which means for you to take input tax credit, you don't have to pay the consideration to the supplier. Credit sale also, you can credit purchase also, you can take the ITC. The government cannot say that no, you will have to pay cash and then only you can take ITC. That's like saying no to credit purchases in India. That's not allowed. But the government says that if you don't make payment to the supplier, within 180 days, if you don't make payment to the supplier within 180 days from the date of invoice, whatever ITC that you have claimed needs to be reversed back with an interest under section 53, which is like 24% interest. But once the payment is made after 180 days, whatever credit you have reversed now can be reavailed. At the time of reavailment, there is no need to consider the time limit under 16(4). Let's look at it with an example here. Say, Xiaomi has made supply of mobile phone to MyG, invoiced and delivered on 10th January 2022. So invoice is there, goods are received, uploaded by Xiaomi in GSTR 1, and it is reflected in 2B, and MyG has taken in their 3B 18,000 ITC. Invoice date was what date? 10th January 2022. Now MyG has taken credit in January 3B itself. However, MyG has not made payment to Xiaomi yet. So they're saying that if the payment is not made in that January month, there is no problem, you can still take ITC. So payment of consideration is not a precondition for claiming ITC. That is not something that you check it in the month in which you take ITC. I have written this. Payment of consideration is not a precondition for availing ITC. So they would have taken ITC in January. However, if the payment is not made within 180 days, then whatever ITC you have taken needs to be reversed. So I have given multiple dates for you to analyze what will be the implication if the payment is not made within these days. 10th Jan 2022 is the invoice date. First payment was made on 23rd March 2022, which is within 180 days. So whatever ITC taken by MyG in January is intact. There is no reversal required. In second case, payment is not made within 180 days, which means 9th July also got over. Payment is not made by MyG to Xiaomi yet. So 9th July is 180th day from 10th of January. Then whatever ITC that was taken, 18,000, needs to be reversed by MyG and added to the outward tax liability for the month of July with interest of 24%. Then why they would not have, why MyG would not have made payment within 180 days? Multiple reasons. Could be fake purchase also, but genuine reason could also be there, like they did not have the cash enough. In that cases, whenever there is a cash that is available with MyG will have to make the payment. MyG is made payment in 25th of August. But what happened? By July month 3B, MyG has already reversed the credit. But when MyG is paying, MyG will have to still pay 1,18,000 here. So can MyG take the credit again in August? Yes, they can take. That's what is the point. They can reavail the credit. They can reavail the credit when they actually make the payment. Then, if payment is made on 10th December 2022, what is special about 10th December 2022? Look at the invoice date. Invoice date is 10th Jan 2022, which belongs to 21/22. The last date of availing ITC happened to be 30th of November 2022. Now, they have made the payment on 10th December, which is after 30th November. Will they have a problem with the time limit for availing ITC? The answer is no, because they said time limit is applicable only in case of availing ITC, not in case of re-availing ITC. This is not a case of first time availing ITC. They have availed the ITC in January, reversed it, now re-availing. At the time of re-availment, don't look at the ITC time limit. Now read it, you will understand it. Payment of consideration, that is value plus tax, is not made within 180 days from the date of invoice. ITC claim needs to be reversed and added back to the liability for the month on which 180 days expires with an interest at the rate specified under section 53. Once payment is made after 180 days, ITC reverse can be reavailed. Time limit is not applicable in reavailment. Same would be applicable for 37A also. This is 37A also. At the time of reavailment, don't check the time limit. They're saying that, so what if I paid half payment? So I got a bill of 1,18,000. Within 180 days, I paid 59,000. 180 days got over, 59,000 is still payable. So 50% of the payment is made. So which means that I have taken full credit of 18,000, but I paid only half of the consideration. So how much I can take? Half of the credit also I can take. Half credit I need to reverse. So after 180 days, you will have to reverse 9,000 instead of reversing 18,000. Now, exception to 180 days condition. Some cases you don't have to bother about 180 days. Reason number one, tax is paid under reverse charge, which means what? If the tax is paid under RCM, which means tax is paid, in our example, tax is paid by recipient itself. Then government says, hey recipient, you pay to the government, I will give you the credit. So whether you pay within 180 days to the supplier is irrelevant for me. Second, supply does not have a consideration. Schedule 1 activity. One branch transferred stock. And as per Schedule 1, Para 2, it will become a supply. The supplying branch paid GST, receiving branch took the ITC. After 180 days, can the government ask receiving branch to pay consideration to supplying branch for the stock transfer? No, because there was no consideration for the supply. So they said, in case of deemed supply, the consideration is not there and I still called it as supply. It is deemed to be paid to the supplier itself. Similarly, we learned in one of the earlier session that if I make a third party payment in relation to supply on behalf of supplier, it will be added back to the value. There was a supply I got for 1,10,000. 1 lakh I paid to the supplier, 10,000 I paid to the third party, but that 10,000 was added to the value. Can the government say that you have to reverse credit for this 10,000 because you did not pay to the supplier? No, no. When you pay to the third party and you add it back to the value, it is as good as paid to the supplier. That is the point that we have here. So there's a beautiful question that is asked by Matanki on the screen, I can see. So the question is this: what if there is an interest payable? From what date to what date the interest would be computed? Interest would be computed in a common understanding of section 50. Section 50 says that whenever there is an interest computation, you have to compute it from, this is the case of what? Wrongly availed ITC. You have to look at the date on which you have utilized the ITC. You will avail the ITC to your electronic credit ledger and set off the date on which you set off, which will be normally the 3B date, till the date on which you have reversed it and then paid back to the government. So that will be the 3B date on which you reverse the ITC. This will be the exact number of days that you will compute. Again, in an examination question, if they don't give you that information, what do you have to do? You don't have to compute interest at all. You have to say that you have to reverse 18,000 with interest. That is enough. And all intermediate questions so far, they did not ask you to compute interest on the reversal of ITC. They just ask you, the answer in ICA material also is saying like with interest. That's it. I hope that clarifies. So we finished our section 16 in full. We will go to 17.5. 17.5 is like a 5-star area. You have no examination where they did not test you. 17.5, which is the concept of block to credit. So if your ISM or whatever material you have, move to block to credit and then open that page and then keep it with you. So I have 4 charts that I have kept for you to learn block to credit. Okay, so what is the concept of block to credit? There are certain purchases, even if you have satisfied all the condition, you can't take ITC of it. Okay, so you have section 17.5 written for it. We call this as ineligible credit. 17.5 has clause A, AA, AB, B, C, D, E, F. Now they've inserted F, A, G, H, I. These many clauses are there. All these purchases are not allowed as credit for you. There is one clarificatory circular also on top of it. This is your learning. And if you learn this, you can be 100% sure that you will be able to answer some question in your examination. That's your learning. First, 17.5a says, motor vehicle meant for transportation of passengers, transportation of persons, which means what vehicle am I talking about? Passenger vehicle. Approved seating capacity is less than or equal to 13% including driver is a blocked credit. Your analysis would be this: if you're purchasing a car in the name of your business, say suppose tax school is purchasing a car for the faculty, right? Tax school is purchasing a car for the faculty, for myself only, and suppose they were purchasing a Mercedes Benz, 50 lakh plus 15 lakh GST, 65 lakh capitalized in the books of accounts. Can the tax could take the input tax credit of it? No, because it's a 5-seater passenger transport vehicle, which is a blocked credit, because then everybody would start booking this motor vehicle to someone's books of accounts and then take credit. So to avoid the misuse, government has disallowed credit on motor vehicles. But it's very specific, no? What if they purchase a truck? Can they take the credit? Yes, they can take the credit. On the truck, the lorries, and the pickup vehicle, all goods transport vehicle, even a hybrid vehicle, Isuzu, Toyota Hilux, there are, Tavera, they all have vehicles wherein partially it is used as a pickup truck and there is front two parts where people can sit and then travel. All these things you can take ITC. Reason? These are all goods vehicle meant for. Suppose I purchased a Honda City and I'm using it. I'm a jeweler. I'm using this Honda City to transport jewelry from one showroom to another. Can I take ITC? No. Because Honda City's purpose is transportation of passengers, not for transportation of goods. You cannot say that I am using it for goods, so I should take credit. You can't. Next. There are exceptions to blocked credit. 3 cases you can take credit. What are the exceptions? Look at the wordings they have written. Inward supply of such motor vehicle for outward supply of the same. Which means what? I'm a dealer. Can I take the input tax credit? Yes, you can take the input tax credit. Then, because I purchased a Swift car to sell the Swift car. Can I take the credit? Yes. Then providing passenger transportation service. I have registered this car as a taxi. In Kerala, there is a Rolls Royce which people are running as a taxi. There's one guy who has taken it. Can you take the credit of this GST paid on purchase of this car? Yes, because it is in taxi registration, he can take the input tax credit. Then imparting training on driving such motor vehicle. Imparting training on, which means you are a driving school and you purchase a motor vehicle which is modified to teach people driving, you can take the credit. They're saying these are very close to the activity that is being done. So because your vehicle is very close to your outward supply, you can take the input tax credit in 3 cases. You can remember it like this: dealer can take the credit, taxi can take the credit, driving school can take the credit. Next, what if an academy, okay, they are purchasing a bus for transportation of their students, 32-seater bus. Can they take the credit? Yes. Again, blocked credit has a capacity. What kind of vehicle would be blocked? If your seating capacity is less than or equal to 13%. This is your understanding. Now, there is a clarification they are talking about demo vehicle. So, there are cases where the dealers would purchase demo vehicles. Right, new releases are happening, demo vehicles. Either demo vehicle will be kept there or will be used as test drive vehicle. Can the dealers take the input tax credit on test drive vehicle? They said yes, because I've used the word inward supply of such a motor vehicle for outward supply of the same. So is this test drive vehicle also being used for selling this vehicle? Yes, so they can take the ITC on test drive vehicle as well. They have clarified that. Second blocked credit is inward supply of vessel and aircraft is a blocked credit. Which means, say if a company is purchasing a vessel or an aircraft, why would a company purchase an aircraft? They can. So all these listed companies, big rich conglomerate companies like Reliance, etc., or in Kerala you have Kalyan Jewellers as a private jet. Even Lulu Group has a private jet. So there are multiple businessmen, when they go ultra wealthy, they will purchase private jet, but they will not purchase it in their personal capacity. They purchase private jet in the name of the business. Can they take input tax credit on purchase of private jet? They cannot, because inward supply of vessel and aircraft is a blocked credit. There are 4 exceptions that I have given for it. Look at the exception. Inward supply of vessel and aircraft for outward supply of the same. I'm a dealer who's dealing and I purchase helicopters to sell helicopters. I'm a dealer. Can I take input tax credit? Yes, which is very similar to the first case that we have. Then I'm providing passenger transportation service, an airline like Indigo Airline, Air India. They are purchasing an aircraft. Can they take ITC? Because they are providing outward supply of passenger transportation. In Kochi, you have something called as water metro, ferry, wherein there are vessel which we use for transportation of passengers. Can they take input tax credit on purchase of vessel? Yes. Imparting training on navigating such vessel or flying such aircraft. I'm a flying academy. Says there is this Tamil movie called Surare Potru, right? In that movie, Surya is trying to become a pilot initially. That pilot academy is purchasing a helicopter to teach people how to fly. Can they take input tax credit? Yes, that's an exception. Transportation vessel and aircraft. Say Blue Dart or FedEx, these are courier companies. They have purchased flights to transport their couriers. Can they take input tax credit on purchase of flights for transportation? Yes, because they are using it for transportation of goods. That's an exception. You look at the last exception that we have here. Or cargo ship, can they take the credit? Yes. Now, 17.5 AB, slightly tricky. A lot of people get a little confused on 17.5 AB, so we will go a little slow on this. They said, inward supply of goods or services for general insurance, servicing, repair and maintenance of motor vehicle, vessel or aircraft for which ITC is not available as per clause A and clause AA. The meaning, I'll give you an example from a friend of mine case, okay? So this fellow has bought a Mercedes Benz. He's very passionate about cars, so he saved a lot of money from his business. He bought a Mercedes Benz. He saw his bill and he saw like 15 lakh of GST. He called me up and asked me, can I take input tax credit of this 15 lakh because I purchased the Benz in the name of my business? Can he take or he cannot take? Yes or no? He cannot take. Why? Reason being, it is a motor vehicle which will be blocked under 17.5A because their seating capacity is less than 13. It is meant for transportation of persons, so he can't take ITC. After that, he called me again and then asked me, like, he's saying that his insurance premium for 1 year on this Mercedes Benz is 1 lakh rupees plus GST of 18,000, which he finds like really high. So then he asked me, can he take ITC on 18,000, which is the GST paid on purchase of insurance on his car? Can he take ITC? No, that is blocked under 17.5 AB. General insurance on the motor vehicle which is blocked under at the time of purchase. Now, institution, an academy purchased a bus 32-seater. Can he take ITC at the time of purchase of the bus? Yes, because it is not less than or equal to 13-seater. It is more than 13. He can take ITC. On the bus he has taken general insurance. Can he take ITC? Yes. That is the first exception that you can see here. Above services are taken on motor vehicle, vessel or aircraft on which ITC is allowed. Repair of the truck, general insurance on buses, all of this you can take ITC because your three services, general insurance, servicing, repair and maintenance, will be blocked only if at the time of purchase you can take credit. If at the time of purchase you can take credit, these three services also you can take credit. Then look at the second exception. A general insurance company for motor vehicle, vessel or aircraft insured by them, they can take ITC if the invoice for the above services are issued directly to the insurance company. There are multiple type of insurance that we have. I'll take a small example so that you understand this in full. Look at this. Echo Insurance is an insurance company. Okay. What is the income for an insurance company? Echo Insurance is selling insurance policies to a lot of people, right? These insurance policies, whatever insurance policy that is sold by Echo Insurance, will have GST on the insurance policy. Say if I'm buying insurance from Echo Insurance and insurance premium is 10,000 rupees, I will have to pay 10,000 plus GST. This is how Echo will sell insurance, right? 10,000 plus GST would be the insurance. Now the question that I have for you is, so whatever GST collected on the insurance premium, Echo will have to pay GST. That will be called as Echo Insurance outward tax liability. What will be the expense for Echo Insurance? Expense will be whenever any of the persons whom Echo has sold insurance has their vehicle available for repair, This fellow, since they have taken insurance, they will not pay the repair charge. They will send it to ACO and ACO pays the insurance charge. That will be their expense. There are multiple type of insurance. Some insurance are called as bumper to bumper insurance or zero depreciation insurance, wherein the bill is directly given by repair center to insurance company, ACO insurance. Some insurance bill is given to the customer and the customer will reimburse from the insurance company. I'm talking about the first category where repair center is directly giving the bill to the insurance company. Can insurance company take the input tax credit on the repair services? Normally on the car which is a 5-seater, repair and maintenance and servicing cost is not allowed as ITC. However, an insurance company can take ITC if the repair center is directly giving bill to the insurance company, and that GST can be set off against the outward tax liability on the insurance premium is the exception. Is it clear to you? Understanding? So look at the second exception. These three services are allowed as credit for general insurance company for motor vehicle, vessel or aircraft insured by them. All right. So a general insurance company can take ITC on the repair and maintenance expenses is what you should remember. All the three. Third exception is a manufacturer. Said for manufacturer of motor vehicle, vessel and aircraft, not just motor vehicle, vessel and aircraft also will be there. So if they want to complicate, this is what they will ask you. 17.5AB is what they'll ask you. So what is this manufacturer? Say Maruti manufacturing unit. They have manufactured 500 cars, kept it in the yard. They wanted to do repair and maintenance of this car so that it keeps fresh, when they send it to the dealers. So whatever car that is there in the yard, whatever expenses they incurred for maintenance of this car, can Maruti take the input tax credit? Normally, no, right? Because Maruti car is a blocked vehicle, so 5-seater. But can they take ITC? Yes, because Maruti manufacturer can take the ITC is what they are talking about. That's a third exception. Then. So we have looked into section 17.5A, AA and AB. Now let's go to 17.5B. 17.5B talks about 7 blocked credits. Let's try to understand this. Okay. This also the exceptions are generally tested in the examination. This 9 blocked credits, I'm separating them into 7 and 2 because the exception for first 7 is same and the next 2 is same. Food and beverage is a blocked credit. If I incur expenses for food and beverage, okay, a company has spent money on food for the employees. Can the company take the input tax credit? No. They said then everybody would misuse it. Second, outdoor catering expenses. There is a festive for the festival, like say for an event on Christmas or for New Year, the company is providing catering for all the employees or an annual day celebration. Can the company take the input tax credit on the food and beverage expenses? The answer is no again. Outdoor catering. Can they take the credit? No. Catering expenses for New Year celebration also no credit. Beauty treatment, health services, plastic cosmetic surgery. Can the employer take the credit? No. Like example to give you, say a sole proprietor, a CA firm partner has taken beauty treatment, health services, hair transplant, and they accounted this in their books of accounts. Can the firm take the input tax credit of these? No, these are all personal expenses blocked. Sixth one, leasing, hiring, renting of motor vehicle, vessel or aircraft for which ITC is not allowed. Whatever is blocked, if you take it on lease also you can take ITC, which also means what? Say, if I purchase a Honda City in the name of my firm, can the firm take the input tax credit on purchase of Honda City? The answer is no. Instead of purchasing Honda City, I have taken the Honda City on lease or I have taken it on rent. Can I take input tax credit on that? The answer is again no. Whatever you can't take ITC on purchases, leasing also you can't take ITC. Then life insurance and health insurance. If the employee's life and health insurance premium are paid by employer, can the employer take the input tax credit? The answer is no. That is what is given in the first 7 case. Now let me give you 2 questions for you. Okay, just to get your understanding correct here, just to see whether you're catching up the whole thing. Say, I'm coming for classes, and the academy where I'm taking classes has booked me my flight ticket. Can the academy take the input tax credit on GST paid on the flight ticket? Yes or no? Let's see how much of that you understood. Say an Indigo flight, the flight charges were 5,000 rupees. There was a 900 rupees GST on it. Can the academy only spent, can they take the input tax credit of it? Yes or no? I want answer from everyone in Chennai. What do you think? On the flight ticket, can somebody take the input tax credit? Is there any blocking on the flight ticket? Answer please, yes or no. You can give wrong answers also. That is okay. But yes or no? Yes or no? What is your answer? Everyone, I need answers, okay? You cannot be not choosing. So I have answers from online. I'm now looking into Chennai. I can see you guys. After your discussion, you tell me your answers, please. Yes or no? Thumbs up or thumbs down? Everyone, please. Let's not waste our time. Make an answer. Thumbs up. I can see. First bench, boys. What's your answer? Yes, yes, yes. Okay. So the answer is yes, they can take ITC. Reason being, why would you think about not availing the credit there? See, purchase of purchase of vessel and aircraft is blocked. The academy is not purchasing aircraft for me, right? They're just booking transportation of passenger as a service. There is no blocking on transportation services. Leasing is blocked. Leasing is not same as transportation. Leasing means what? I am taking this, say for example, they're taking a private jet on lease. Will they get the ITC on the rental charges? No. These are transportation of passengers. There is no blocking on that. You guys understanding this? Right. So look at this. Food and beverage, outdoor catering, beauty treatment, health inch services, cosmetic plastic surgery, leasing, hiring, renting of motor vehicle, vessel or aircraft for which ITC is not allowed, life and health insurance. All the seven, there are two exceptions where you can take ITC. What are the cases where you can take ITC? Carefully look at. First one. Inward supply of above all seven goods or services by registered person to provide outward supply of same category of supply or as an element of composite or mixed supply. Number two, above supply of service or goods provided by employer to employee as a statutory obligation. Two exceptions. I'll give you an example for the first exception. I used to give this as an example in classes as well, so I'll just recap it for you. I hope you guys have watched this movie called Ustad Hotel. If you have watched it, then you will understand this example better. It's a Dulquer Salman movie. It's a Malayalam movie. There's in Tamil as well. So this particular movie, I'll tell you the story of it. There is this five-star hotel in Calicut town in Kerala. This five-star restaurant in this movie is selling the best biryani in the town. However, later in the movie, we will understand that this hotel, what they do is that they purchase this biryani from Ustad Hotel and then sell it to the customer. They're selling this biryani to the customer at 500 rupees plus GST of 18%, which is 90 rupees, right? 590. And they're purchasing this biryani from Ustad Hotel for 100 rupees and pay 5 rupees GST. Question is, this five-star hotel, which is called as Beach Bay International, can they take input tax credit on this 5 rupees? They are taking inward supply of food and beverage. Can they take ITC? The answer happened to be yes. Why? Because this hotel is not consuming the food that they have purchased. They are making inward supply of food and beverage to make outward supply of the same. That is the first exception. Inward supply of above goods or services for outward supply of the same, or as an element of composite mixed supply. We'll give you another example for that. Say, Air India flight. If you go book Air India flight, when you pay 10,000 rupees for the flight ticket, you get transportation of passenger as a service. You also get food. Now, what Air India has done is that Air India has taken catering services from a third-party caterer to provide food to the passengers who are actually taking the service of transportation of passengers there. Question to you guys would be this: Can Air India take the input tax credit on GST paid on catering services? Yes. Why? They are providing an outward supply, which is transportation of passengers with the food as a composite supply. In their composite supply, one element is food that they are giving it to the passengers. So they can take ITC on whatever GST paid on inward supply. Are you guys understanding this? So that's why they said it could be as an element of composite mixed supply. It's kind of a dealer same setup. Then, if it is provided by employer to employee as a statutory obligation. Common example question is this. Say a company has given, they are into mining and they have a mining rig in their factory setup. As per Factories Act, they are giving food to all the employees working in the factory because it's Factories Act mandatory food that they are giving. In that case, employer will be getting one benefit, which is that they can take ITC. So any of these services are provided by employer to employee as a part of statutory obligation, they can take the credit. Look at the next one. Membership in a club, health or fitness center is a block to credit, which means, say, gym membership of one of the employees are paid by the employer. Can they take the input tax credit? Can the companies take the input tax credit? No. A membership of any club, health or fitness center is a block to credit. Then, employee travel benefits like LTC, HTC, leave travel concession you would have learned in income tax, hometown concession, leave travel concession. These are provided by employer to employee as their part of their packages. Now, when I was working in a bank earlier, I used to have this LTC package, and people used to travel to Singapore, Malaysia for this package. Say 65,000 rupees is spent by an employee for the package. Entire amount is paid by the bank, the employer. Out of this 65,000, 5,000 was GST. Can the bank take the input tax credit of this 5,000 paid for the employee travel under LTC? No, that is a block to credit. When it can be taken as ITC? Only when it is a statutory obligation, which means the package was given as a part of a legal obligation by the employer. Then only you can take the credit. Then, so we have finished A, AA, AB and B. Now we will go to C and D put together. We will try to learn. Now they're asking a lot of questions on C and D in terms of block to credit. They said two block to credits can be learned together, 17.5C and 17.5D. 17.5C says that works contract service for construction of immobile property is a block to credit. Similarly, inward supply of goods or services for on construction of immobile property would also be a block to credit. What is the inward supply of goods and service you will take for construction of building on? You will take an inward supply of material like cement, steel. What services? Architect service, interior designer service, contractor service, all of them you will take. Two exception to it would be inward supply of works contract service for outward supply of the same, or works contract or inward supply for on construction of immobile property being a plant and machinery. In these two cases, you can take the ITC. There are two definitions that we have to look at, but we can look at it after we look at it with an example. I have given an example for you to understand this better. This example would give you full clarity. Nokia, a company that you already know of, is planning to do a Nokia tower, a building. To construct this building, they have given one single contract. All the material purchase, everything is to be done by one single contractor. Then this contractor services to Nokia will be called as works contract service. The GST definition of works contract service is this, in common man terms is this: you're giving goods and services over a single contract for construction, erection, commissioning, etc. of a immobile property. Then your contract is called as works contract. And in GST, works contract is deemed to be a supply of service in Schedule 2. So royal contractor is buying material, they're providing services, and they're constructing the entire building for Nokia. The land is owned by Nokia, construction is done by royal contractor. The contract value is 100 crore, then 18 crore GST is also billed by royal contractor to Nokia. Can Nokia will book this building as an asset in their books of accounts. Can Nokia take the input tax credit of 18 crores spent on building this Nokia towers? Answer is no. It is blocked under 17(5)(c). However, Royal contractor is planning to do the construction like this. They're saying that my outward supply is to Nokia. It is works contract service. My outward tax liability happened to be 18 crore. To do this construction, Royal contractor has outsourced some work to a subcontractor. There is a subcontractor called as ABC contractors. Royal contractor said foundation construction of this Nokia towers, I will subcontract it to Royal contractor subcontracted it to ABC contractor. So then the contract goes like this. ABC contractor is providing services to Royal contractor. What service? Works contract service only. And they're charging 1 crore plus 18 lakhs GST. Can Royal contractor paid how much money to ABC contractor? 1 crore 18 lakh. This 18 lakh is GST. Can Royal contractor take the input tax credit of this 18 lakh? The answer is yes. Why can they take the input tax credit of this 18 lakh? Because they are taking inward supply of works contract to provide outward supply of works contract to Nokia. That is the first exception that I have made you read in this. What is the first exception that we have under this? It says inward supply of works contract service to provide outward supply of works contract service, you can take ITC. Like a dealer, I'm taking the same block the service to provide an outward supply of same. You can take the input tax credit. Similarly, the Royal contractor to construct this building for Nokia has purchased cement, steel, etc. Can a construction company take the input tax credit? Can the construction company take the input tax credit on cement, steel, etc. that they have purchased for construction of this building? They can take the ITC. So if their outward supply happen to be, works contract service, they can take ITC on inward supply works contract service as well as the money paid for construction of this particular building like cement, steel, etc. Are you guys understanding this? Is it clear? Okay. Nokia decides I will not do works contract for construction. I will do my own construction. So Nokia is directly purchasing cement, steel, etc. and engaging architect contractor to build this Nokia towers. Can Nokia take the input tax credit of this purchase of cement, steel? No, that is blocked under 17(5)(d). What is 17(5)(d) says? Look at the blocked credit 17(5)(c) and D. 17(5)(d) says inward supply of goods and or service for construction of immobile property is also a blocked credit. Are you guys understanding this? Okay. Now, what is the first exception that we have? First exception is if you are taking works contract or you're purchasing material, cement, steel, etc., and you're constructing an immobile property, but that is a planned. It's a machinery. Inside the factory, you're building a machinery which is attached to the earth with foundation, so it is an immobile property. Then you can take the credit. So look at the second exception. Works contract service or inward supply for on construction of immobile property being plant and machinery, you can take the input tax credit. Then we have to understand what do you mean by plant and machinery. They've written plant and machinery definition like this. They said plant and machinery could be apparatus, equipments, machinery fixed to the earth by foundation or structure. So whatever foundation is also considered to be a machinery. So if I'm into making I'm making plastic bottles. I have a factory wherein I have machinery which is going to, if I put plastic raw material inside it, it will create plastic bottle like this. All my machineries are attached to the earth. Can I take input tax credit on the money spent on construction of this plant and machinery? Yes. Even though it's immobile property, I can take the credit. Now, plant and machinery would include all the machineries, even the structure, but will not include three things. What are the things included? Not included, it excludes land and building or any civil structure, which means the factory building can never be treated as a plant and machinery. You can't take ITC on the contract you have given for building this factory building, but the machine you can take ITC. Telecom towers for Jio, BSNL, Airtel, telecommunication towers are not considered to be plant and machinery. Third one, pipeline laid outside the factory. Whatever pipeline you have outside the factory will not be treated as a plant and machinery, which also means what I have written some additional point here. These three things are not considered to be plant and machinery. So you can't take ITC on the works contract or purchase of raw material for these three things. There is a clarificatory circular on top of it. Let me teach you that clarification. So I was talking about 17.5 C and D. There is one clarificatory circular that we have. I'll just look at that also, because clarificatory circulars are the ones that is tested in the exam most likely. So we should ensure that we have an idea on that clarificatory circular. If you guys want, you guys would put this, take a photo and then keep, right? I'll tell you what it is. There was a clarification on optical fiber companies, OFC. Okay. Now, you know that in the definition of plant and machinery, they have excluded telecommunication towers. So automatically there is a confusion that is there. There are another type of telecommunication companies which does connectivity through the cables under the ground. Okay, so these are optical fiber cables. So these companies, like including your Geo and VSNL, there is another company like that. There are multiple companies who does, like, large part of optical fiber cabling they have done. Okay. Broadband connections and all comes through underground cables. So these companies, what they do is that they dig service connectivity manholes. After connecting a large part of your wires, they will prepare a manhole, which is like they will dig holes inside inside the land, and they will have all the plug points and connections inside that manholes, wherein they will connect all the wires together, and then they generally fix a PVC duct to ensure that it works like an underground repair center. So when there is some problem in the connectivity, they will open this service connectivity manholes, and they will connect the service connectivity manholes, and they will use the whatever manholes, PVC duct and sheets that they had to repair this. So if Geo wanted to do little more number of optical fiber cable laying under the ground, they would have some contractor preparing a service connectivity manhole. Duct and sheets is another term that we use for it, to create this connectivity. So the question that we have here is, can Geo, for example, can Geo company, okay, can Reliance take the input tax credit of whatever amount they spent and GST spent on the same to create this PVC duct and sheets and service connectivity manhole in optical fiber company? Why there is this confusion that they have? We know that plant and machinery excludes land, building, civil structure. It excludes telecom towers. It excludes pipeline outside the factory. So there was a confusion. Telecom towers and this service connectivity manholes does the same job. But should I exclude that also from the plant and machinery? The answer is no. They clarified. You look at PVC duct and sheets, service connectivity manholes. These are not land, these are not building, these are not telecom towers, these are not pipeline outside the factory. So since it is not mentioned in any of those three exclusions, we would assume it to be included in the definition of plant and machinery. Therefore, you can take ITC on whatever material you purchase for ducts and sheets, or whatever works contract you have taken for ducts and sheets or service connectivity manholes. So they said it's not blocked, you can take ITC. This is your clarification. Other block to credit. Let's quickly finish off other block to credit. 17.5E says inward supply for which tax is paid under section 10 is a block to credit, which also means section 10 is composition levy scheme. You look at, there is a registered person who is under composition levy scheme, section 10 or 10(2)(a). When they make inward supply purchases, can they take input tax credit? Answer is no. Why they can't take input tax credit? Because they said if you are under composition levy scheme, you can't take any ITC. Now they sold this to another registered person. Will they collect GST from the registered person? No, because there is a condition which says that once you are under composition levy scheme, you can't collect GST from the customer. But they have to pay this 1%, 5% or 6% concessional rate to the government. After paying this 1%, 5%, 6%, can their customer take the input tax credit of this 1% paid under composition levy scheme? Answer is no, because whatever tax of concessional rate is paid under section 10 is a blocked credit for the person who's purchasing it, because he's anyway not paying it. That is what is mentioned in section 17 subsection 5, section 17 subsection 5 clause E. Now look at clause F. It's a specific purpose driven. Okay, so I was talking about NRTP. So look at the blocked credit relating to NRTP under 17.5F. It's slightly tricky. So they said it's not fully blocked. They said ITC on domestic inward supply is blocked, but ITC on IGST paid on importers allowed. Why they have done like that? They have done it with a specific intention. I'll tell you the intention here. Okay, all of these PDFs are available in our tax school app. Okay, look at this. Say there is a Ferrari car dealer from Dubai who's coming to Delhi Auto Expo. He's there for 4 days. He would have taken what registration in India? He would not have taken normal registration. He would have gone for an NRTP registration. So Ferrari car dealer from Dubai, when he's coming to India, he would have taken an NRTP registration. The government is expecting him only to import the car, pay customs duty, and then sell it in India. That's why he needs to have a NRTP registration. If he is somebody who is coming to India, and he is purchasing from India and selling in India, he should have taken normal registration is their expectation, not NRTP registration. So to discourage people who are taking NRTP registration to purchase locally and then sell, instead import and then sell, they have blocked the credit on their domestic purchase. So as I said, Ferrari car dealer has imported 4 cars from Dubai and then sell it in Delhi Auto Expo for 4 days. When he is importing, he would pay customs duty and IGST. Customs duty is not allowed as credit for GST, but IGST on import can also be taken as ITC. However, in 2 days, he sold all the 4 cars. So 2 more days, he has already paid the rent for the exhibition. So he decided to purchase another 4 Ferrari cars from his local seller in Delhi. Can he take the input tax credit on GST paid on the purchase of Ferrari cars from locally the Delhi guy? The answer is no. That is blocked under 17 subsection 5 clause F. Now you have an additional amendment that is being added there. Look at this amendment. They're saying that goods or service or both received by a taxable person which are used or intended to be used for activities relating to his obligation under corporate social responsibility is a blocked credit. Section 17.5 FA that has been added as an additional amendment. So this clause says what? It says that suppose you know what is the whole intent of corporate social responsibility, like CSR. The purpose of CSR itself is reflected in this blocked credit. The purpose of CSR is what? All the organizations who are making profit in India, they're using social resources to make this profit. So you should contribute some amount out of your profit for the social aspect of the country, right? This is corporate social responsibility. If you are, say for example, they are creating an advertisement for traffic awareness, they're creating an advertisement for clean India, all of this would be CSR expenses that they're incurring. To do this, they're incurring some expenses which also they have paid GST on. So a company has paid 10 lakh rupees for a vendor to spend some activities on CSR. They paid 10 lakh plus GST. Can the company take the input tax credit on the GST on the CSR expenses? No. If you are taking ITC, it means that you have taken that inward supply also for your business. What is the basic purpose of CSR? To use some amount for purpose other than your business. So CSR expenses, if you take ITC, it does not make the logical sense. So they said, whatever money you spend for CSR, you're claiming it as a CSR expense, you can't take ITC on the same. That is FA. 17.5G. What is 17.5G says? It says that inward supply for personal consumption is a blocked credit. I have purchased a shirt and I have booked it in my in the P&L account of my business. The business paid the money. Can the business take the input tax credit on the GST paid on purchase of the shirt? No. It is a personal expense. You can't take ITC. Then 17.5H is something that has been tested multiple times in the exam. So look at it. Inward supply for goods which are lost, stolen, destroyed, written off, or disposed of by way of gift or free sample. What is the meaning of this? They are saying that you make a purchase, you make an inward supply of goods which are lost, stolen, destroyed, written off, or disposed of by way of gift or free sample is a blocked credit. You make an purchase of raw material and you lost this particular goods, or somebody stole this particular goods, or you write it off because it is out of fashion. you can't take ITC, because government is saying that this could create a lot of misuse. People could purchase and then sell it without GST, and when they are asking where is the stock, they will say it is stolen, it is destroyed. So to avoid that, they said, is the moment you say the goods are lost, government is not getting any GST when the goods are lost, how will they check whether it is actually lost or stolen? So they said, don't expect me to provide you the ITC on your purchases. So purchase of the goods which are lost will not be available as ITC. But that does not mean if you use it in the process, in costing you would have learned a concept called as normal loss, abnormal loss. When you use it in the process, you will have some kind of losses that is normally happening, which you adjust to the, which if you adjust to the cost itself, we call it as normal loss. If you put it in the P&L account, you call it as abnormal loss. These are not the ones that is reversing the ITC. If you put 1000 kg into the process and you're getting only 950 kg, that 50 kg you don't need to reverse ITC. That's not what we are talking about, because that is used in the process. I'm talking about goods which are lost because of fire accident. You write it off because it's out of fashion. That kind of thing is what is the meaning of lost. So you can remember this point in your head. Process loss, there is no need to reverse any ITC. 17.5i, which is available only till your May exam, because after that this section is modified. 17.5i says that after tax is paid after finding out tax evasion. Suppose Mr. A has sold goods to Mr. B and they did not issue invoice. They were transporting the goods and they got caught. And after getting caught under sections 74, 129, 130, they paid taxes. Section 74 is a case of fraud and they have paid taxes under section 74, including penalties and all that. 129, 130 talks about when the goods are caught while it is being transported, how much money needs to be paid as taxes, penalties, etc. 74, 129, 130, all of them are there for you to study only at final level, not at inter level. But please understand it like I have given in bracket. Tax paid after finding out tax evasion. After finding out tax evasion, you paid the taxes. You cannot call your customer and say, hey, you now take the credit. That is not allowed. That is the understanding of it. So if you paid a tax under 74, 129, 130, it is not available as credit. These are the block to credit concept. I can quickly run you through a few questions before we close this area. A lot of questions are there. We don't have the luxury of time to do all of them, but some questions at least we can look at. Look at this question on the screen. PSY Limited is engaged in manufacturing of motor car. The company paid following amount of GST to its suppliers against the invoices raised to it. Compute the amount of ineligible input tax credit under GST law. General insurance taken on cars manufactured by PSY Limited. 1 crore. Can they take input tax credit? Yes. Why? Manufacturer can take ITC on the insurance. Buses purchased for transportation of employees, seating capacity 23. Can they take ITC? Yes, because it's more than 13. Life and health insurance for employees under statutory obligation. Can they take ITC? Yes, because it is an exception, statutory obligation. Outdoor catering in Diwali Mela organized for employees. Can they take ITC? No. So what is the ineligible ITC in this? 3,50,000 would be ineligible ITC. So which option is correct? Option 2 is correct here. 3,50,000. Look at question 21. Advice regarding availability of ITC under CGST Act in following independent cases. Number 1, AMT Company Limited purchased a minibus having seating capacity of 16% for transportation of its employees from their residence and office and back. Can they take ITC? Yes. Why? 16-seater more than 13. Number 2, Bangur Ceramic and Manufacturing Company purchased 2 trucks for transportation of goods of its finished goods from factory to the dealer located in various locations within the country. Can they take ITC? Yes, because it is transportation of goods. What is blocked? Meant for transportation of passengers is blocked, not for goods. 10. 3. Hans Premium, dealer in luxury cars in Chanakipuri, Delhi, purchased 5 Skoda VRS cars for sale to customers. Can they take ITC? Yes. Who can take ITC? Dealer can take ITC. Okay, so it is not blocked. It's an exception to the blocked credit. Then, number 4, Sun and Moon Packers Private Limited availed outdoor catering services to run canteen in its factory. Factories Act requires the company to set up canteen in its factory. Can they take ITC? Yes, it is a statutory obligation. Look at question number 24 here. A taxable person is in the business of information technology. He buys a car, seating capacity 5, for use of his executive director. Can he take ITC? No, it is a blocked credit. Look at question 29. Xenon Private Limited Agra is a registered supplier engaged in manufacture of taxable goods. Goods valued rupees 10,50,000 were supplied by the company to Freshbite Private Limited, a registered supplier located in Firozabad, without an invoice with a fraudulent intent. Since the company evaded taxes by not issuing invoice, show cause notice was issued under section 74, and then the company paid a tax of 1,26,000 and interest and penalty. Company paid the tax interest penalty after the order was passed by the proper officer. Examine ITC entitlement for Freshbite Private Limited in respect of 1,26,000. Can they take input tax credit? No. Why? Tax paid under section 74, 129, 130 is a blocked credit. So this is paid under section 74, you can't take ITC. Look at question 30. Flamingo Limited is an airline providing passenger transportation services by air. The company offers meals of premium quality to passengers on board the aircraft. The value of such meals is compulsorily included in the price of air ticket. The company avails outdoor catering services to Daniyaram Private Limited for providing such meals to its customers. Examine whether Flamingo Limited can take ITC on outdoor catering services. Yes, I have given you the same example. It's a composite supply of passenger transportation and food, Air India. And for that, they have taken catering services. Can they take input tax credit? Yes, they can take ITC. 31, the last question for this segment. With reference to the provisions of section 17, examine the availability of ITC in following independent cases. MBF, an automobile company, has availed works contract service for construction of a foundation on which a machinery to be used in production process is to be mounted permanently. Can they take ITC of this? Yes. Why? A machinery is plant and machinery. If there is a foundation for plant and machinery, it is an exception to the blocked credit. Can they take ITC on the foundation? Yes. For plant and machinery, they can take. Right? Plant and machinery includes even foundation and structure. What is not included? The building, land will not be included. Are you guys understanding this? Then, question number 2. Shah and Constructions procured cement, paint, iron rods and services of architect and interior designer for construction of a commercial complex for one of its clients. Can they take ITC? Yes. Why? Shah and Construction is like royal contractor. They are providing construction service. For that, they purchased cement, steel and all that. Can they take ITC? Yes. Look at the third one there. ABC Limited availed maintenance and repair services from Jaggi Motors for truck used for transporting its finished goods. Can they take input tax credit? Yes. Why? It is truck. Purchase of truck, you can take ITC. So, on the purchase of truck, if you can take ITC, you can take ITC on general insurance, repair, maintenance and servicing. That's the first exception that we have. That's it from the question side for blocked credit. So what we can do is we can take a break. We have section 18 also to look at, which will take like 15-20 minutes for me to finish. So then I will park your ITC chapter away. Then we can go to the next chapter, which I will leave it to your preference. Okay. So my thought process in my head, whatever chapters that I wanted to do in this basic segment, I have finished that. So I'll give you option to do the next. So let's get started, everyone. Let's look at what is section 18.6 in your material, whatever you have. Look at 18.6 and then let's do this discussion. So 18.6 I'm reading with rule 40. So it talks about the same thing. Talks about capital goods. So let me read you through the provision, give you a quick understanding of it and then finish it off. Supply of capital goods or plant and machinery after use, for which ITC has been already claimed. They're saying that if you have purchased capital goods, there is no special provision for availing ITC. You will avail ITC in the month in which you satisfy all the section 16 condition. So you have taken ITC on purchase of capital goods. After taking ITC, after using it for some time, what you have done? You have now transferred or sold this capital goods. They're saying that normally when you sell a product, you pay tax on transaction value. But that's not the case for capital goods. While purchasing, you have taken ITC. You are supposed to pay higher of the following amounts. What is this following amount? I have written it as 1 and 2. First is tax on transaction value, which is second hand sale value. Number 2, ITC already availed minus 5% per quarter or part from the date of invoice till the date of disposal. You have to reduce for every quarter you have used this asset 5% and then look at what is the balance amount. Compare these two amount and whichever is higher needs to be reversed is the provision. Okay. For this purpose, you will consider quarter to be 3 continuous months ending 31st of March, 30th of June, 30th of September, 31st of December. It's a fixed quarter that you have. So the easiest method for me to explain you 18.6 is to look at a question. Look at the question here, question 40. Bharat Associates Private Limited purchased a machinery worth 9 lakh. Machinery is a capital goods? Yes, you purchased a machinery for 9 lakh, excluding GST on 27/2017, on which it paid GST at 18%, which means they would have taken ITC on 18% of 9 lakh and availed ITC. On 5/3/2019, it sold the machinery for 7 lakh to Hindustan Associates. The GST rate on sale is 18%. What will be the course of action for Bharat Associates to follow under CGST Act? So we are talking about what case here? We are talking about case of second-hand sale of capital goods. We are talking about case of second-hand sale of capital goods. In such cases, I'll go back to the question. Give me a moment. Question 40 is what we were looking at. So I have purchased the machinery for 9 lakh rupees and sold it for 7 lakh. This is second hand sale of capital goods. So which section I should apply? Section 18.6 I should apply. What is 18.6 says? Normally I will pay what? Tax on transaction value when you sell any product. What is the second hand sale value or transaction value of this product? It is 7 lakh. So normal case, any product I have purchased and sold, I would pay on sale value 18%, which will be how much amount? 1,26,000. Am I correct on the number? But this time, because it is an asset at the time of purchase, you have taken ITC, you should compare it with some other amount. What is it? B. At the time of purchase, how much is the ITC availed? How much you would have taken as ITC at the time of purchase? It is 9 lakh multiply with 18%. Which is how much amount? 9 lakh into 18% would be 1,62,000 minus 5% per annum or part. For every quarter, for quarters that you have used. From what period to what period you have used this asset? 27/2017 till 5/3/2019. So in 2017 calendar year, how many quarters you have used it? Even part of a quarter should be considered as full quarter. So how many quarters you have used it? I purchased it by July. First quarter, second quarter, already fixed quarter. So first quarter is Jan, Feb, March. Did I use it? No. Second quarter is also fixed quarter, which is April, May, June. Did I use it? No. So only 2 quarters in 2017. 2018, how many quarters I've used? Full 4 quarters because I sold it only by 2019. Then, yeah. 2019, I sold it in March, but I have used part of a quarter. I should treat it as full quarter. 1. So 2 plus 4 plus 1, 7 quarters into 5%. So how much I can reduce? 35% I can reduce. Can you tell me the amount? 35% of 1,62,000. How much will that be? That is the amount that I can take as ITC. So whatever ITC I have taken, I should reduce what is eligible for me, and then balance I have to compare with tax on transaction value, and higher needs to be reversed. It is 56,700. This I have to reduce. So what is the net amount? 162 minus 56,700 would give you 1 lakh 5,300, correct. Out of these two amount, how much is the ITC to be, or tax to be paid, or ITC to be reversed is how much? It will be higher of the above amount, which is 126,000. If the amount of this amount was higher, then I would have taken that amount. In this particular case, which amount is higher? 126 is higher, so I have taken this amount and then paid it as taxes. What is that they're trying to achieve by here? They're saying that after purchasing, if you're selling it for a very small amount, still you will not be eligible to take full ITC. You can take ITC only for a quarter or part 5%, and then balance needs to be reversed. But the quarter definition is very, very important here, considering what your quarter is fixed. Say I purchased an asset in March 23 and I sold it by April 10th. How many quarters of usage I can claim? March 23 I purchased. April 10 I have sold it. How many quarters of usage I can claim? I have not even used it for 1 month. But how many quarters of usage I can claim? 2. Why? For the first quarter in March I have used. So part of a quarter also I can take 5%. That's the importance of the word quarter definition here. So in April, if I have used for 10 days, I can actually take the 5% for April quarter also, April, May, June. So for every part of a quarter also, I can claim 5%. This is the provision that we have. Now, what is the problem here? If you want to take 100% credit, you should have used this asset for how many quarters? 1 quarter, 5%. So 20 quarters I have to use it to take 100% credit, right? Which means how many years? 5 years. So they're saying that if you are selling the asset after purchasing less than 5 years, you will always have to do 18(6) computation and then see your second-hand sale value and the tax on the second-hand sale value. Is it higher than the ITC that is eligible? Whatever ITC you have taken minus ITC that is eligible, you do that second computation and then compare it with the tax on transaction value, and higher amount needs to be paid. This is the provision that we have. So they said there are certain product which you will not be able to use it for 5 years at all. In that cases, it will become a unfair provision. I'll give you an example. Say I have product like jigs or dies which are used as a mold for producing the product, like refractory bricks, mold, dies, jigs, fixtures. These will not have a 5-year lifetime. In such cases, suppose if this product is not usable after 1 year, what will you do? You will sell it off as what? Scrap, because it is fully utilized. So if you are selling it as scrap, you will get very small amount, right? Because you are selling it as scrap. So your tax on second-hand sale value of scrap will be always lower. But you have to reverse 80% of credit. Why did I get 80% of credit? 1 year you have used means for 4 quarters you have used. Only 20% credit you are supposed to take. So every time you sell these things as scrap, you will have to reverse 80% of credit, which is unfair because you've used it as full. That's why you only have scrap left. So they said, in case of refractory bricks, mold, dies, jigs and fixtures, no need to compare it with this point number 2. You only pay tax on transaction value. They have never tested this in the exam, so I've written it as there is no need to compare it with point number 2 in this case. Is it clear, all of you? Is it clear? All right, perfect. Now let's move to the next discussion on section 18. Section 18 talks about cases of availing ITC and reversing ITC. Okay, let's look at what is cases of availing and reversing ITC. There are 3 scenarios that I've kept in section 18. They have tested once in the exam this. Generally, they test a lot of questions on this at CA final level. But for inter level also they have tested, which means that they are not hesitating from testing questions on this. Let's look at this. I will give you the scenario quickly to get the logical understanding of this. For me, it is a very simple provision, so you have to be careful because it is not regularly tested. When it is tested, it will look new, but it's not very, very new as such. So much of information on the screen, so slowly let me bifurcate it for you. Meet Mr. Raju. He's a supplier of goods in Kerala, general category state. He started his business on 1st April 2022. When he's starting his business, is he required to obtain registration? No. In general category states, up to 40 lakhs, there is no requirement for him to take registration. So he started his business without having GST number. Whatever outward supply he makes during this period, there is no GST payable. On the outward supply, no GST payable. Similarly, an unregistered person cannot take ITC on their purchases. On 31st of December 2022, his turnover has exceeded the threshold limit of 40 lakhs. So he has gone and taken registration. On the last day before he was taking registration, he looked at out of 10,000 kg of raw material he purchased, 2,000 kg is still in the stock. This 2000 kg, when he purchased during the time when he was unregistered, he did not take ITC. Why? An unregistered person cannot take ITC. Now, this 2000 kg stock, he will be selling after 1st of January 2023, which means after registration. He will end up paying full taxes of GST, but he could not take ITC on this 2000 kg. So, government said, Section 18 says that whatever stock you have on the last day before you obtain your registration, government is allowing you to take ITC on the stock as an opening credit to ensure that whatever taxes that you are paying on the goods that you have on the last day before taking registration, now I am giving you an opportunity to take ITC. Otherwise, it will become double taxation because you are paid at the time of purchase taxes. Now, at the same time, you did not get ITC because you are unregistered. Now you are paying taxes. I will allow you to take credit. That is the first case that we have mentioned in your section 18. Look at the case number 1. An unregistered person, we are discussing cases where you can avail ITC. An unregistered person obtaining registration, either because the turnover exceeded the threshold limit or it is voluntary registration. Input tax on inputs held in stock of raw material, work in progress, finished goods on the day immediately preceding the date from which he becomes liable to pay taxes can now be availed. Case number 2. Before that, let me elaborate a little more on the case number 1. Suppose during this time he purchased a machinery also. When he purchased a machinery, when he was an unregistered person, he purchased a machinery. Can he take ITC at the time of purchase of machinery when he was unregistered? Answer is no, because an unregistered person cannot take ITC. Only a registered person can take. Then, even after he obtained registration, he is using the machinery to produce the goods. Can he take ITC on the machine now? Because whatever goods produced using this machine, he is going to pay GST. Can he take ITC on the machine? Answer is again no. There is no such provision. Reason, government fears misuse of this provision and says that I am already giving you credit on the stock, but at the time of purchases there is no proof, there is no 2B for you because you did not have GST number. How will I check whether it's your purchase or not? I'm asking if the credit that you're claiming is more than 2 lakh, a certificate from a CA to check it. So I don't want people to misuse it. So capital goods I will give credit only if you were registered at the time of purchase of capital goods. So I have written a very important point here on the box. A lot of your question can be answered just by this box. No ITC is available on capital goods if the person was unregistered at the time of purchase of the capital goods. Are you guys understanding this provision here? So even if you're using at the time of, even if you're using after taking registration, at the time of purchase, if you're unregistered, you can't take ITC. Second scenario. A new scenario, Mr. Gopal. This fellow is Mr. Gopala. So let's look at what is this scenario for Mr. Gopal. Mr. Gopal in 2021-22 was opted for composition levy scheme. What is that we have learned about composition levy scheme? If you are under composition levy scheme, whatever outward supply that you make, you will end up paying 1% GST. How much? 1% GST. On your inward supply, can you take input tax credit? No, composition levy scheme person cannot take inward supply ITC. Now, you have decided to move out of composition levy scheme in the next year. The next year means 20 to 23, you decided to go for normal scheme, which means you will end up paying normal rate of taxes. On the last day you were under composition levy scheme, you have 10,000 units in the stock. When you check this particular stock, you understood there are 10,000 kg of finished goods in the stock, which you purchased when you were under composition levy scheme. Because you purchased at the time of composition levy scheme, you did not take ITC. Are you guys understanding? Now, can you take input tax credit? Can you take input tax credit on the stock at the time you're going for normal scheme? Answer is yes. Otherwise, what's the problem? I paid taxes expecting that I will end up paying only 1% while selling it. But you, while selling it, you end up paying normal rate of taxes. So on the 10,000 kg, 10,000 units of finished goods, are you allowed to take input tax credit, or you're not allowed to take input tax credit? You're allowed to take input tax credit on the day in which you're moving to normal scheme. This is the provision that we have. Same logic of unregistered to registered, CLS to normal scheme also has the same impact. Now, the next question I will have here is, say, during the time when he was under composition levy scheme, he had purchased a capital goods, a machinery. When he purchased on 1st October 2021, he purchased a machinery. While purchasing the machinery, he paid a GST of 1 lakh. At the time of purchasing the machinery, can he take input tax credit? No, he was under composition levy scheme. Now he is going to be under normal scheme. Can he take ITC on the machinery? Answer is yes. Why? Was he registered at the time of purchase of the capital goods? Yes. So what is at the earlier point I have taught you? When you are unregistered at the time of purchase of the capital goods, you can't take ITC. But if you're registered and under composition levy scheme and you move out of composition levy scheme, you can take ITC even on the capital goods. But you have used this machinery to produce the product and which are sold during composition at 1%. Yes, because of that they have said, I will not allow you to take full 1 lakh as ITC now. For every quarter you have used, we're going to use rule 40 to club this. Every quarter you are under composition levy scheme, you're supposed to reduce 5% per quarter, and balance only you can take ITC. So when you're moving out of composition levy scheme, how much ITC you can take? I purchased in which month? October 2021. When did I move out of composition levy scheme? 31st March 2022. Which means how many quarters I've used? October, November, December, 1 quarter. Jan, Feb, March, 2nd quarter. So 2 quarters I've used it. After reducing this 2 quarters, which means every quarter 5%, which means 10,000, 10% of 1 lakh. 10,000 if you reduce, balance 90,000 can be taken as ITC even on capital goods. So if you analyze section 18 cases where you can take ITC, in case of second case, what is the second case I have listed here? CLS person switches to normal scheme. You can take ITC on stock. Also, ITC on capital goods can also be taken after reducing 5% per quarter or part. But that option is not available in first case when unregistered person is obtaining registration. Now let's look at the third case. What is third case talking about? Third case is Mr. Rahim. Rahim has two products, product X and product Y. Product X is exempted product, product Y is taxable product. Because you have two products, he has taken registration. What happened is, Mr. Rahim is selling product X. Will he pay taxes or will not pay taxes? Will not pay taxes because product X is exempted. Whatever purchases he has made for product X also, is he eligible to take ITC or not eligible to take ITC? Not eligible to take ITC. Why? Whatever inward supply that you make, to make outward supply which are exempted, whatever inward supply that you make, to make outward supply which are exempted is not allowed as credit for you. So whatever raw material you would have purchased for making product X, he can't take any ITC. Right? On 1st of January 2023, what happened? The exemption available to product X is withdrawn by the government. So product X is now taxable. Now, when he looked at the warehouse on the last day when product X was exempted, he found that there are raw material of 10,000 kg in the stock. At the time of purchasing this 10,000 kg, he could not take ITC. Why? At that time, the product on which this 10,000 kg raw material was used was product X. And the before 1st of January 2023, product X was exempted, so he could not take an ITC. So he has 10,000 kg raw material. While purchasing, he did not take any ITC. But this 10,000 kg raw material is going to be used for product X after 1st of January 2023, which means while selling product X, he is now paying taxes. So government said you can take ITC even on this raw material 10,000 kg as an opening credit now. Then what about capital goods? He purchased a machinery which was used for manufacturing product X. At the time of purchasing, he did not take ITC because it was used for exempt product. Even after the product became taxable, I'm still using this machinery. Can I take ITC? Question again we are asking. At the time of purchase of this machinery, is he registered? Yes. So I will allow you to take ITC even on the capital goods, but after reducing 5% per quarter or part. So if you look at the scenario here, in second scenario and third scenario, what is third scenario? Let's read third scenario. A registered person's exempt supply become taxable supply. In that case, input tax on inputs held in stock of raw material, work in progress, finished goods, as on the day immediately preceding the date on which such supply becomes taxable can now be availed. ITC on capital goods for CLS person. Capital goods which are exclusively used for exempt supply can now be claimed after reducing 5% per quarter or part. So this is also going to be allowed now. So for first case, unregistered to registered, only stock, CLS to normal scheme or registered persons exempt to taxable, both stock ITC can be taken. Also, I can take ITC on the capital goods. This is what is section 18 says. I will take you through a question. Before that, let's look at some control. No, we can look at the question, then come back to the control mechanism for this. Look at question 20 on the screen, everyone. Babla and Bros is exclusively engaged in making exempt supply of goods and is thus not registered under GST. On 1st October, the exemption available on its goods gets withdrawn. On that day, the turnover of Babla and Bros was 50 lakh. Examine the eligibility of Babla and Bros for availing ITC, if any. You tell me. Which category Babla and Bros comes under? Please read the question and confirm me on the chat box that you have read the question. After reading the question, you should go back to I want you to look at these three scenarios and tell me whether the question is talking about scenario number 1, 2 or 3. This is a very important question. Huh? Just get your understanding correct here. Are they talking about, will they come under case number 1, 2, 3? 1, 2, 3. Which one they come under? One is unregistered to registered, two was CLS to normal scheme, third is registered persons exempt supply becoming taxable supply. Which scenario they come under? I want answers on the chat box, everyone. Question again for you. Which category they come under? They come under first category. Why? Because they are not registered under GST. They were making exempt supply and not registered. Now they are taking registration because their turnover is already 50 lakh on the day when the exemption is withdrawn. So they can take ITC on what? Can they take ITC on stock? Yes. Can they take ITC on capital goods? No. Because at the time of purchases, if you're unregistered, you can't take ITC on the capital goods. An unregistered person taking registration can take ITC only on stock. Are you guys clear on this? Can I have a quick yes and a thumbs up? Okay. Look at clause B here. Sorry, question B here. Mamata Sales trades in exempt goods and provides taxable services. It is registered under GST. On 1st October, the exemption available on its goods gets withdrawn. Analyze the scenario and determine the eligibility of Mamta Sales for availing ITC, if any, on inputs and or capital goods used in supply of exempt goods. You tell me, Mamada sales would come under which category, first category or third category? Perfect, everyone. It is third category. Why? Because they are providing both exempt and taxable service. Then they are registered. Then one of this. So it's registered persons exempt supply becoming taxable supply. So they can take ITC. Can they take ITC on stock? Yes. Can they take ITC on capital goods also? Yes. Both of them are allowed. Are you guys understanding? This is third scenario. So this is a registered person's exempt supply becoming taxable supply. So this is one question that they can test you, wherein you can get slightly confused about it. What if people take a lot of fake credits because government has no check on whether it's their stock or not? They put three control mechanisms into it. What are the three control mechanisms? One, whatever credit that you're taking, point number one, ITC to be availed within 1 year from the date of invoice, which means whatever stock you are now taking ITC on, whatever capital goods you're taking ITC on, you should have purchased that in the last 1 year period. So any invoices I'm unregistered for 5 years. Can I now go and claim ITC on the stock I purchased 5 years back? No, only in the last 1 year. That is understanding. Point number two, I have to give a declaration on how much stock I have. After I give this declaration, look at the point number two, declaration to be filed within 30 days from the date of availing ITC, the details of inputs held in raw material, work in progress, finished goods and capital goods. Point number three, they are putting trust on a professional. They said, if your total claim, CGST plus SGST plus UTGST plus IGST put together is exceeding 2 lakh, the declaration needs to be certified by a practicing CA or CMA. Total credit that you're now claiming is more than 2 lakh, you have to get it certified by a practicing CA or CMA is the next provision you have. Have you thought about what about the opposite case? Which means I was a registered person. I purchased a lot of stock and I enjoyed full ITC. Now I'm cancelling my registration. Unregistered to registered, opposite. Registered to cancellation of registration and becoming unregistered. I talked about a CLS person opting for normal scheme. What if a normal scheme person was opting for composition levy scheme? What if my taxable supply becomes exempt supply? In those scenarios, at the first period, when I was registered, I would have taken full ITC. Now I'm selling this, I'm cancelling my registration. Whatever stock I have, I enjoyed ITC. Now I don't have to pay taxes. So opposite scenarios, I will have to reverse my credit on the stock. So look at registered person cancelling registration, normal scheme person switching to composition levy scheme, taxable supply gets exempted. You have to reverse the ITC that you have already enjoyed on your stock, because now you're not going to pay taxes or you're going to pay concessional 1%. Same is with capital goods. After considering the same 5-year time period, balance lifetime of the asset in number of months, you will have to reverse the credit. Says ITC involved in remaining useful life in months of capital goods will be reversed on pro rata basis, taking useful life of 5 years. How would you compute the reversal amount? ITC claimed into number of months remaining divided by 60 months. 60 months is how many years? 5 years. Same understanding of 5% per quarter. They're saying consider that your lifetime to claim full ITC is 5 years. And if you have used the asset on less than 5 years or 60 months, balance remaining lifetime, you will have to reverse the ITC even on the capital goods. I'll put an example for you to understand that. Look at this. I purchased a machine. On 1st January 2023, I took an ITC of 60,000. And 31st Jan 2025, I cancelled my registration. When I have taken full ITC? January 2023 itself, I enjoyed full ITC. Okay. Now I'm cancelling my registration. Am I eligible to take full ITC on this machine? No, I should have used this machine for 5 years to get full ITC. What happens? How much is the remaining useful life in months? I've used this asset for how many months? We will have to look at. 2023, 12 months. 24, 12 months. 25, 1 month. So 12 plus 12 plus 1, which is 25 months I've used it. How many months I should use to get 100% credit? 60 months. Remaining useful life is how many months? 60 minus 25, 35 months. So my reversal would be 60,000 I have taken as ITC into 35 divided by 60, which would be 35,000 I need to reverse. This is the provision you have. Are you guys understanding this section 18? All right. Let's move to the next set of discussion.